A report says S&P Global Ratings has revised its oil price assumptions.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
At 10:05 a.m. Eastern Time, we expect comments from Fed's Muslim, who gives welcoming remarks at the Community Banking Research Conference. Text is expected, but no Q&A. So Deutsche Bank changes its Brent price forecast for 2025 to a cut by 18% to $66 a barrel on expectations of large surplus and lower forecast for Chinese growth and plans by OPEC Plus to revive supply. So Deutsche Bank note that OPEC Plus plans will amount to a supply increase of roughly 1.5 million barrels per day in actual terms next year. Still, short-term risks are skewed to the upside following modest 600,000 barrels per day deficit in the third quarter and neutral balances in the fourth quarter. At 10:05 a.m. Eastern Time, we expect comments from Fed's Muslim, who gives welcoming remarks at the Community Banking Research Conference. Text is expected, but no Q&A. As the OPEC Plus say the JMMC meeting has concluded and compensation has been discussed. So Fed's Muslim doesn't comment on monetary policy in the remarks.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Taking a look at the Fear and Greed Index, 68 out of 100 equaling greed, and the Crypto Fear and Greed Index, 42 out of 100 equaling fear. And looking at the VIX, currently up 0.21% at 19.31.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
At 10:30 a.m. Eastern Time, we get our weekly EIA data. Crude oil inventories forecast a draw of 1.465 million on the prior draw of 4.471 million. Crude Cushing inventories prior a build of 0.116 million. Distiller inventories prior a draw of 2.227 million, and gasoline inventories prior a draw of 1.538 million. So Biden calls follows Iran attack on Israel, according to people familiar with the matter, and US President Biden joins a G7 call on the Middle East today. At 10:30 a.m. Eastern Time, we get our weekly EIA data. Crude oil inventories forecast a draw of 1.43 million on the prior draw of 4.471 million. Crude Cushing inventories prior a build of 0.116 million. Distillate inventories forecast a draw of 2 million on the prior draw of 2.227 million. And gasoline inventories forecast a build of 0.2 million on the prior draw of 1.538 million. So Macron backs temporary extra tax on large French companies. So according to the Times of Israel, Israel is said to be mulling attacks on Iran oil rigs and nuclear sites in response to the missile attack. So that did come out at 1:54 Israel time, which is approximately 4 hours ago. One minute remaining. I'll lead with EIA crude oil inventories. 10 seconds. Build 3.889 million. Build 3.889 million, higher than the expected draw of 1.43 million. Crude Cushing inventories. Build 0.84 million. Build 0.84 million. Gasoline inventories. Build 1.119 million. Build 1.119 million, higher than the expected build of 0.2 million. Distiller inventories. Draw 1.284 million. Draw 1.284 million, higher than the expected draw of 2 million.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Francis Macron says Europe is no longer the top priority of the US. So Russia's Novak says OPEC Plus sticks to previously made oil output decisions.
So Novak says that OPEC Plus will continue to monitor the market situation. Novak says that we see high increase in oil demand for this year.
And Novak says we are looking at global oil demand growth with optimism. So the EIA reports imports of Venezuelan crude oil in the weekly petroleum supply report for the first time since May 2019. And Novak says the oil market is volatile, yet the Middle East tensions are already priced in. Russia's Novak says oil supplies could be decreased due to the conflict. So Brent crude futures pair gains after the EIA storage report last up 2.12%. At 11 a.m. Eastern Time, we expect comments from Fed's Bowman, who gives a keynote speech at the Community Banking Research Conference. Text is expected, but no Q&A. At 11 a.m. Eastern Time, we expect comments from Fed's Bowman, who gives a keynote speech at the Community Banking Research Conference. Text is expected, but no Q&A. Israeli military chief says Israel will respond to Iran's missile attack.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
Israeli military chief says Israel can strike any target in the Middle East. One minute till we get the text release for Fed's Bowman. Ten seconds. Fed's Bowman doesn't comment on monetary policy in the speech text. So EU's von der Leyen and Keir Starmer aim to hold an EU-UK summit in early 2025. According to the Wall Street Journal, OPEC Plus agrees to ease production cuts in December. And OPEC says we're working with Russia, Kazakhstan, and Iraq to offset past overproduction, according to the Wall Street Journal.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
So the Nasdaq now up 0.34% and the S&P 500 up 0.14%. The Dow up 0.13%.
Check 1 2, mic check. Break time, be right back. Get rid of that one. Old man, break time, be right back. How y'all doing? Good morning. So sorry to be late this morning. I watched the presidential or vice presidential debate last night, and then I went down a rabbit hole on because Gamma's the doors or windows or doors of Gamma are opening. And I went down a rabbit hole for geopolitics. So we have to talk about that. We'll talk about geopolitics at some point. But the market is beginning to open. Not quite in a more significant way, but we're getting there. So I ended up being awake last night, working until I think 2 in the morning. I was awake this morning, bumping around, drinking coffee, and I just needed some time, like my voice and some de-stressing time this morning, so I could get on the stream and be ready for you guys. So we put out a brief last night, and we talked about major risks to the market. And the brief the day before highlighted the risks to the market, the real risk to the market, early in the week, which was not the port strike. I'll say it again. I've been having to answer that question now for weeks, and I continually get asked that question. And it's not the port strikes for a multitude of reasons. Not just one, many. But the real risks to the market early in the week were data and geopolitical events. And then, of course, I have to suffer through the vice presidential election or debate. I already voted. I don't need to watch this shit. I have to watch it because of market implications. And because we've had debates, we've had just presidential shit that can move our markets to price in outcomes. So I have to pay attention. And I'll be honest, this election in particular, usually it's not so bad. Like a little bit of a vol here and there, pricing different shit in. This goddamn election, I'm fucking done. Like I just want this shit over. It's a literal like scrouge. Just the election is a scrouge on our country, and I'm so disgusted by it. It specifically to the market. It's a scrouge in the market. It's disgusting. All of it's disgusting. It's gross. And our politics shouldn't be here, and the impact on our market shouldn't be here, but it is. Anyways, I gotta watch that shit, and so how to do an analysis of it, how its impacts on the market. Did that. Then went down I went down the looking at everything last night for the market brief, and I'm like, fuck, there's some danger here. And it's the norm. So there's a few things I want to start off the program today with two things. There are what's called expectations, which is in a normal market, what you'd expect day in, day out, week in, week out. And then there are mechanics to a market that are very influential at different times in the year. And there are different mechanics. There are like seasonality mechanics. There are end and beginning of quarter mechanics. There are events mechanics, right? You go into a rate decision or any major stuff or shifts. And there are mechanics that you can see through expectations. And so you try to look at history for examples of those mechanics, because banks tend to run the same plays over and over again. They literally take notes. Oh, I kid you not on this. They literally take notes and have been taking notes in all of modern history. There was a time during the rate increases and the inflation spike we had where it was reported that Wall Street went back to playbooks from the 1970s. and how they made money in this specific time frame during rate hikes. And I was fascinated by that because not that price action will be the exact same, but there are instances where banks often will pull out the same playbook. And that's not the same playbook every time, but let's say you've got, in this example, you've got the end of a quarter and the start of a quarter. They probably have like 8 playbooks at most, and they're kind of clear to see. They're not exact. They won't be exactly timed. They won't be exactly dated. But there's like a rhyme and a reason. You see the price action, and then you go back and there are students of this too, right? There are people out there. Vol Wiz can tell you this. He will go back and he will look at, I don't know, and similar scenarios. He'll look back at like 20, 30, 40 years, and he'll compile a bunch of them and say, boy, there is a rhyme to this stuff. And then within reason, there's some stretching up and down and stuff, but when you can kind of tell, and it doesn't work, like exact, and you might only get 3 out of the 4 moves right. So they don't always happen fully, but some of them will happen, and there can be other influences, right, that may not be particular to the last example. But so you are at least using that as a template. And sometimes it doesn't agree with other expectations. Gamma, time frame, traditional charting, Elliott wave, you name it. Geopolitical events, political events, data incoming, maybe partial data is in your favor to prior examples, but not all of the data. Real estate, I'm looking at you right now. I did ask on the show yesterday for you guys to read an article from Wolf Richter, because that is a prime example of when you're looking at real estate as a whole, there are no prior examples to that exact scenario. And people are looking to real estate for those examples, and they can't find them. It's not exact. It's not even close. They're like the last time we've had some of these data points was the housing meltdown. But we don't have those same data points in other parts of the housing market. So right now, if you think back to when we started this end of quarter and beginning of quarter trade about,
It's not just Israel that
what is it now, 3 weeks, 4 weeks ago?
Iran attack.
I prepped you for it using historical examples. And I prepped you in market briefs, prepped you on live streams, and I said, this is probably the 2 closest examples I got here, and we should follow this somewhat. And we kind of have to this point. Now, sometimes those historical examples fall in line with expectations, and sometimes they don't. And in this particular instance today, or coming into this morning, and into last night, we have something expected.
Do you want to stay up to date?
There is an expectation out there when you come out of the clench into the end of a quarter. That as the first week progresses, you have like inflows that come in, and then you get the gamma market begins to not tighten up, but firm up, I guess. And the market has room to run. That clench that you had in the last quarter comes undone. A new gamma picture is painted over that first week. And you start to see the market a little bit more freer to move. And what's fascinating is I was reading a post on Wall Street Bets about 3 days ago, and they were discussing the caller, and someone said, it's a bearish trade, bro. Market's going down. And it really, it's called a bearish seagull, but it's not that bearish. Price has the ability to move in either. The beautiful thing of a bearish seagull is it reins the market in, or the intent is to rein the market in, but it also allows price to move freely within that range. And only then do those numbers become magnets and then repellents. But you can still break through them. There's no like, we have to do this or we have to do that. We pop collars all the time. There are some like magnet forces at certain points. There's some repel at some point, and you can still pop these things. They're just a good reference, good guide, stuff like that. But I was fascinated that the guy on Wall Street Bets goes, no, bro, it's bearish. We're going down. And I'm like, oh, fuck no. That's completely fucking wrong. But, you know, some people simplify things a little bit too simple. So let's talk about where we are. It's important to do this, and I can't do it in a brief quite like I can do it on a stream. One of the best parts of what we do here, I used to struggle. I'm not going to name any names here, but I used to, years ago, I subscribed to a service, and I paid a lot of money for that service. And I mean, three times, many years ago. More than that. For like $18, I was paying like 30 or 40 times. This is one that's famous right now. You guys all use it. And I paid a lot of money for that service. And that service put out a morning brief. And I think they put out a small afternoon brief, but then they had a bunch of tools and cool website and all that shit. And they were always late for directional shifts. And one of the best parts of what we do is we give you these briefs and tools and stuff, but we are monitoring this stuff 24 hours a day, either in the Discord. You've got like people at nighttime trading, you got people in the daytime trading, you got me on the live stream all day long. So depending on where the market actually moves, there's always someone there to say, hey, this is what's actually going on, and look for this and look for that. And depending on whatever happens, we'll take it there, right? So it's a beauty of what we do. It's very unique to what we do. It makes me happy. Anyways, so going into the end of the day yesterday, I want to show you guys a few things there. We had some changes in gamma into the end of the day. And we're going to go down there right now and take a look at it. And this gamma picture is different again today, too. Now, what I want to show you here, what is fascinating is, like the wall to, on the upside, the wall to 470 or 578 is gone. We have free and clear movement all the way up to 5,800. Now there's some other gamma. There's some bumps along the way, but like major local resistance, not even the call wall, is at 5,800. The call wall currently is at 5,860. Whew. And this is some space to run, isn't it? And your gamma flip, hold on here. Is very weak. And your local support. Remember that local support we talked about? A little bit in the negative area here. Gamma flip is 29 million as of yesterday. Your gamma flip is right here. Remember, we're trading down into this slam, slam, slam.
It says that we pumped oil.
Very weak. It's holding.
September.
Why is it holding? I'll go into that in a few minutes, why it's holding. Now, you got slam, slam, slam. Why is it holding? This is all weak right here. And you've got sellers knowing that the market is going to expand and that the market to the downside, a window of weakness is opening. You ever heard that term? I know where that term comes from. And there's a window of weaknesses here. It should be renamed from window of weakness. I've said that before. Yes, the window of weakness is there, but we go up just as many times as we go down in this window. But it is there, and you can see it clear as day. There's a small gamma bar, negative gamma bar down here. It's not showing up right now. It's not consequential at the moment, but there is a small bump in the road down here at 56.35. Or was that 25? I should rephrase myself. Into yesterday's close. I don't know. It's a little bit lower. It's like right here right now. Now, as of yesterday, the daily trigger was slightly above. Now it's higher and higher and higher and higher, right, as time passes. But there's a giant air gap here. Let me show you that. Giant air gap here. And the put wall is way lower. 5,500, and that's the put wall. And then this is bottom of the consequential put gamma in the market. Another fascinating part is that if you look at, let me see, I'll bring this up. Hold on here. One quick second here. Another fascinating part is that if you look at gamma up here, it's a big pot to fill, isn't it? There's not a lot of pot to fill down here. Not a lot of pot. Not a big payout down here. So you're starting to set up this idea that, well, dealers can send us all the way down to 5,500, not pay any of this shit, and then swing back up again. Whoop. And fill all these guys right here. Kind of keep us reined in, right? Bounce back and forth and first make a trip lower. So the bear case becomes more and more convincing. You've got some other stuff going on as well. You've got the at-the-money vol curve. Can't see it here, but this is October 3rd, October 4th. The vol curve was going up from there up, but now the vol curve is beginning to head to the downside. This was going up about 3 days ago. And look at this. You got volatility in here, right? On the 3rd and 4th. That's tomorrow. And on so that's tomorrow, Thursday, and Friday, PCE. We have some more data and stuff tomorrow, too. We'll go over that, and we'll expand upon that in just a minute. So you got volatility expected into the 3rd, into the 4th. You can't see the dates here, but it's there. Just trust me. Next thing you can look at would be CTA positioning on the S&P 500. And look at that. CTAs got a little more room they can buy, a little tiny bit. But there's a chance that CTAs will cease being buyers. And if price goes lower, they could become sellers. If we break above certain prices, though, they could be forced into buying. Okay? Vol control is also coming into a place where they may not be any help to bulls. Right? They could be going right down. If price goes down, they could stop helping bulls and buyers. If price goes up too much, they could, although become, as a counter argument, could become helpers. And that's not talked about, is it? Now, here's something fascinating. COT positioning. Asset managers long-short ratio. So we can get that to come up this morning. Sometimes we can. Takes a moment sometimes for it to come up. Now, here's the counter argument. COTs are like, they're done. Like, let's check out what the COTs are. Remember, we just had a big pullback, right? And you're like, let's get down below that. Let's get down below that gamma flip, sweep lows, and then, start blooding to the downside. And it's not happening, is it? So let's see, can we get this thing? Can I kick the box and make this thing work or what? I don't know if I can right now. All right, one more time. And you can't see that here. Hold on, let me show you this. Hold on a second here. Can you guys even see this here? Hold on. How do I show this? I can't show this whole thing. You just got to trust me on this. You just trust me on this right now. Because it looked like it was going down on the other one, and this one looks like it's going down too, but it's not. It's actually cut off from your screen that you can see. I don't know why that is. Oh, there we go. Hold on here. You can see it right here. See if I can. There we go. There, these beep. They're max long. They're max long all over the place. They're like max long. Max long here. Not max long there as of this morning. That's your leveraged money long short ratio. Your A&M long short ratio cranking. Non-dealer long short ratio cranking right now. And we had price going down. So this morning we got 3 of 4. We had 4 of 4 as of yesterday. So meanwhile, price is doing this. Meanwhile, price is going against this, and so we're looking to squeeze to the upside is the point that I'm trying to make to you. Hold on, let me get rid of this here. Give me one quick second here. So you basically have inflows right now. You basically have, not inflows, but you basically have all these different parties, plus you had 67 billion inflows of money, panic money, buying the market during the Fed meeting. And I mean panic buying. I think Jedi Marcus brought it up. He said something like, we come out of the Fed meeting and it's just buy. Don't care the price. Don't care if it pulls back. Don't care if we have October. Don't care if there's a seasonal pullback. Just don't care. And so unless the market begins to trade, make significant breaks to the downside, all that money doesn't care. And what that does is it begins to stabilize pullbacks. Begins to say, yep, we're going to go higher and higher and higher and higher, whether you like it or not. And they're not panicking. They don't care. They just don't care. Retailers don't care. Banks don't care. Nobody cares. And you would think that would translate into a setup for everybody to get burned. Not the case when you have real money buying. Real money selling, I use this term called real money selling and real money buying. It is different than everybody being off sides. It's when the market, in concert, forces the market higher or lower. They can be a force that can make the market crash too. It's like this cascade effect. It's not how we get to that point where everybody's off sides. It's when we start to roll over and they cascade, or roll up and cascade to the upside. They literally drive the market higher or drive the market lower. So as of right now, at this moment, if you are a bear, you probably need at this point to be event driven for probably your best setup. And I'll be honest with you, your best setup that I've seen in a long time is right now. Like if all the cards were in place and you had a soup and you got 10 ingredients, you got like 8 of them. But not the last 2. And you likely need an event of some kind to push us down into some doom. And you didn't get it done yesterday. I got to tell you guys something. Yesterday's price action was historical in the context that we've done it a million times on the first day of the quarter. Listen to that closely. Yesterday's price action was the same as most first week of quarters in this situation. We talked about it the day before, happening just like that in stream. So you watched the setup yesterday, the historical setup, and people like we're down because of the port strikes. I'm like, no, we aren't. This is just historical fucking price action. Why are they saying this? And then we get the Israeli and Iran stuff, and they parked the market. That's what mattered. If real damage was done yesterday, they would have dropped the market down. You could see the liquidity leave the market, and they were waiting for that event, unknown of unknowns, to plunge the market down. So there was information given yesterday to you. There was information given to you during the rate decision, and there was information given to you yesterday, which is expect some kind of like normalcy to the historical path of the market right now. And at key inflection points, they will wait to see if something unknown does happen. So if you're a bear, you should expect us to follow this historic path. But you should be waiting for an event-driven drop. So the window is there, but no, you're not going to just go there. Late last night, I got on Twitter and I was like, please don't make me suffer through a mechanical downside move. You know what those are? It's when the market forces you lower without any reason, right? Event-driven reason, just to get a relief valve. It's very mechanical and nothing. You're not going to crash, and they're just hoping that something data comes through so we can crash. They're horrible to trade in. They make your eyes bleed for like 4 or 5 days, and the result is what would have happened with a shallow pullback in a fucking face ripper higher in this new gamma regime. You know, it would take like 2 weeks rather than just get it done in a week, which would be the historical example. I don't know if you guys are following along right now, but so time or price and expectations. Maybe that fits this is the better answer for you. Is it going to take me 2 goddamn weeks to have a pullback? Oh, not 2 weeks, like a week? Do we have to like go slow to the downside, or can we get it done in the morning? Do we get to squeeze this week or next week? You get what I'm saying? That stuff is like an eye bleeder. It's like pure like bleeding eyes, waiting for some event that's not going to come. And let's talk about that next part of this. The market is waiting for more doom from Israel. And that pullback this morning, let me go over here. That pullback this morning should have coincided with what? Israel launching big attacks and all that stuff and get us down there, get us underneath. You didn't get it. And you need something like that that's unknown. Question becomes, will you get that? Will you get that unknown unknowns? Yes, it's still there. The problem is that it's the Middle East. And I'm going to briefly go over this with you in stream, but I already started writing this. There's an expansion upon this and a special report for you guys out there. I'm going to give you the overview, the top line overview here. I'll put this up so you can watch it while I talk. I'm losing my voice again. So, Israel was attacked on October 7th of last year. Today is October 2nd. They love anniversaries. On its own, they love them. If you go to any of the subreddits for the Middle East right now, they are on fire talking about the anniversary. And from Israel's enemies' perspective, Israel is waiting for that anniversary to do something. From my experience, Israel will do nothing on the 7th. And they just want to see the suffering of waiting for something to take place on the 7th. They'll likely do something before or after the 7th. Let these people prepare, and nothing will happen. It's kind of like when you don't do your homework and you go to school and you're waiting to get yelled at and it never comes. Just going through that sucks, doesn't it?
S&P Global Ratings
waiting for your parents to yell at you, and they don't.
Weather strike.
They might not even need to yell at you, right? So just that psychological warfare, it means a lot. And there's a lot of psychological warfare in the Middle East. Outside of that, start looking at what's going on in the Middle East as a whole. There's a deal being put together for stability and trade between Saudi Arabia and Israel. You have Persians in Iran that do not want this to happen. They use Arabs who are not Persians to fight for them. Okay? So you have Hezbollah in Lebanon. And you have this anniversary of an incursion that was likely prompted by Iran, right? Believe it or not, right? To stop the process of a deal between SA and Israel. Now, I don't know who started that bullshit. I don't know if it was probably Mossad or even SA that might have even pushed Iran into that, because it's setting up something fascinating. The setup at this point is Israel now has a valid reason to go into Lebanon, remove Hezbollah, and install a more powerful Lebanese government that will work in concert with SA and Israel. And Iran gets cut out. And the possible cherry on top is Israel is a la carte at some point right now to do whatever they want to wrap this whole present up.
Level that can't declare.
They can literally say, well, we're justified now.
Core personal consumption.
We can remove Hezbollah, finally. Well, that's not me saying that. That's Israel.
Lower interest rates influence home and auto sales.
Voice news disconnected.
They're justified to remove Hezbollah in full. They're justified to also get a little payback on Iran, right? Putting this whole deal together. And at the same time, having the ability to go in and say, you know what, we're going to remove some oil. We're going to remove some of their ability to produce and ship some oil. Million barrels of oil. So if you're an oil trader, you probably still have a good, viable upside move coming to you in oil if that takes place. Israel literally has a list of shit they can do. Take out their ports, take out their industrial infrastructure, take out their oil capabilities. Not all of it, but just enough. And let another country swoop in and replace those million barrels, right? Everybody's making money here, aren't they? And while we're at it, maybe we even take out their nuclear making abilities while we're there. Well, they can't do that. Sure they can. The U.S. has that ability, and the U.S. was given some free fire stuff over yesterday, weren't they? It's like it's all lining up. You see it? It's like stack, 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 stack. The story is being written along the way. So if you're a bear and you think, well, the door's closing, Cap, there's no way, there's no downside move here. There is. There's actually a way for the market to trade all-time highs. 6,002. And still gets and sweep down to get your low in October and November. Might not happen, but you are dependent upon that news as a seller or a bear. And you're not getting it right now. You didn't get it yesterday. Everyone was warned yesterday. Not yesterday. They warned they were going to send the missiles over yesterday. But if you were in any of the Middle East subreddits, they were all in bunkers the day before. Now, you're an American armchair general sitting in your chair, and you're like, that's bullshit. No, it wasn't bullshit. They were reporting on it from within. You're just not told that as an armchair general. If you actually go to their chat rooms, they knew about it 24 hours before yesterday. That's why nobody died. It was a setup. It was a setup to validate the incursion and put this fucking deal together. These are like geopolitical moves in the background. And nobody got hurt, right? So the window's there. It didn't happen. There was no mass casualties, no mass damage. Israel didn't lose any jets. You know why? They were all up in the sky. They opened their airspace a half an hour after the war yesterday. It's like wagging the dog. Couldn't be more blatant. And it's coming into focus, and all of those ingredients coming together for this to happen. Now, one thing that's left here is, what do they do to Iran? And we don't know. They have a whole menu of shit they can do and likely get away with in tacit agreements from other parties in the Mideast. And meanwhile, who gets fucked in all of this? You know. I'm not going to say all those parties again. Palestine, Hezbollah, right, who are used as puppets by Arabs, that are used by puppets by Persians, that are used by puppets by Qataris and Saudis, right? I kid you not, this stuff is fucking always blows my mind. They used to have an acronym in Iraq. They'd called it OIL. O was for oil, I was for Israel, and L was for logistics. The logistics was not for the Middle East. It was for China. Anyways. Excuse me. So, is there still a window to the downside? Yes, there is. We are following the historical trade this morning. Let's talk about what that historical trade looks like. I've shown you 2012 already. Yesterday, I told you, don't worry. If you really want to short, you're going to be given more than one opportunity. This is not the top. We're going to get some nice liquidity grabs all along the way. Many opportunities for you to put a short in the market. And we're going to look at instead of 2012, we're going to look just at March of this year. They're getting lazy right now. They're getting super lazy. I mean really lazy. Let's just look at March. Why March 2? Do you know why March? Why is March relevant? Well, Cap, they did QE3 in 2012 in September. Why is March relevant? We have such short memories. Remember that we were expecting rate cuts. In 2012, we had the QE3 the week before the Fed meeting. The Fed meeting the week before the fall Q3, Q4. We got QE3 the week before the quarter end into the new quarter. In 2024, we got the rate decision after the jump from Q1 to Q2. At that time, we had unknown information. So you had two examples that are similar. People are like, why are you comparing 2012 to 2024? And I'm like, oh, it's easy. We thought we were getting and we were poised for a rate cut just after first to second quarter. And the previous one in 12, we got a QE3 and Q3-4. Fairly easy. Will we follow it exactly? No. But look at this. This follows a similar path to 2012. Boom, still went down, went up, even though we didn't get a goddamn rate cut. A little bit more severe than if we had gotten a rate cut. If we had gotten the rate cut, probably be like right there. If you look at 2012, it's the same setup. And it wasn't as deep. We had more information back here before we got to the end of the quarter. Let's just check and see where we are right now. Huh. Would you look at that? This is the 2nd of April right here. What'd they do? They dropped us down, and right around 11:30 in the morning, they started the ramp. There was no more Israeli war. And what did they do? They ramped us all the way up into Thursday. What are they doing right now? What are they doing right now? Let me know. Talk to me, Goose. Something similar, aren't they? Not too different, huh? Not too far out of line, is it? To where we are right now. It's like a playbook. Almost like they run this shit over and over and over. Might not be the exact same. Now let's see where we are. So that's the historical expectation. I would love to have like historical gamma. Would love it. And what did they do this morning? 6 a.m. Blast us down. Not quite to 11 a.m., right? 11:30, but you know, close enough. And they ramped us up again. Huh. Interesting. And then we've got Thursday. Call it 1:30 in the afternoon, right in there. Right around there. What do you think the playbook is here? Any guesses? How high do they ramp us? Do you know? I don't know. I have no idea. Let's go back and look. Let's go back and look and see what they did. Oh, shit. They ramped us to just below the prior high in the market. Just below it. Major high in the market. Just below it. I mean rampa, baby. And look at that. There's a little pullback over here, too. You see that? Boop. No new low. Snap a line and follow it all the way up. If that line breaks, you know where we're going down to the daily trigger. Cool. Got it. Writing it all down inside the old Rolodex up here. Not necessarily expectations, but I now have my historical example. Not tied to it. Not guaranteed. Let's go back over here for a minute. At least gives me some structure based upon expectations. Come on, now get over there. Squinch all that up so I can get back over there. There we go. Where's all... Oh, my God, look at that. Boy, that looks real familiar over there, doesn't it? Super familiar. Got that high, got that old big old high over there. I wonder what they're talking about doing over here. Looks like March, doesn't it? Isn't it? You can't make this shit up. So we now have this prior peak right here. Okay. If we go to history, probably a trade to 575 again. Whoop. Right? That would be best case expectation. Historically. What's another thesis we could put out there? If we get a pullback, you could probably say that as long as price stays on some kind of trend, you could expect a move up here into the middle of the day, right? If at any point we begin to break that trend, probably going to make a significant low, aren't we? Either there, event-driven, doesn't matter. But we can make this posit now, can't we? There's another posit we can make here, too. Even though a likely only trade to there, gamma in the market has changed, hasn't it? So let's get this morning's gamma and see if it's tied into this 75, if anything's developed there, or if it's still up here at 580. Because we might have the room to go all the way up there. All simple stuff, right? You guys are like, you're like, this guy goes down the goddamn rabbit hole. I know some of you are at home just laughing right now at me. Like, this guy's absolutely crazy. All right, so we've got an outline. We've got some expectations now. We got a feel for this now, don't we? Another note we can make is, along the way, no new lows, right? As long as we get no new lows, we're good to go. Rock and roll. All pullbacks need to be higher and every major run higher. Now let's take a look at the gamma situation this morning. Bottom right-hand side of the chart. Not much has changed. We got the low down here. We got that low right there, right? Boop. We can actually go back into negative gamma. We just can't break trend. Okay, good to know. How about some upside? Look at that. Oh, we ain't got no gamma at 575. 0. So we can go back to this upside top. say it's not exactly the same as March, and it's not exactly the same as 2012. Maybe the top. And what else do we know here? Oh, what's that right there? Top here, top here. And it might be a little bit higher, huh? Look at that. Peak, peak, peak. Peaks around 579.19. I bet that's 5,800 on SPX. I'll make a bet without even looking it up. I'm not even going to look it up. I bet that is beep. I bet that's pretty close to 5,800 right up there. So we even have the potential to squeeze up here, maybe PCE. And then comes the doom, right? Bam, down a trend. Doom, downside. Ass face on Fintuit. What does he say? Fade it. I don't care about the reaction. If it's down, you go up. If it's up, you fade it. Okay, I got that. We got a plan now, don't we? We got a plan coming together. It's like the A-team. We got a plan. We know we can likely follow some kind of a trend. We know that any pullback that does not make a higher or a lower low, we're likely going to trade up into Thursday at some point or PCE. Right? PCE or Thursday, PCE slam. We got some targets. We got some base case scenarios. If you're a bull, woo! Things are shaping up. We're not at October 7th yet, are we? If Israel doesn't do it on the 7th, let's say they do it a week later, you don't get any events. Yeah, that's where the big one comes in. But there's the 7th, isn't it? If you look back on March, you look back in 2012, you get that kind of nonsense up there. Come back down into trend. All of a sudden, Israel does launch an attack. It's a nice little pricing in of war, isn't it? War doesn't come, it's later, we bounce back up again. Almost like it's preordained. Almost like the market knows before we get there. Bam, bam, down there. Oh, shit, doom and gloom. Nice little window over there for October 7th anniversary, isn't it? No response from Iran today. Did I get the boot off Streamlabs now? What are you guys telling all your friends? Get over there and watch this crazy guys talking. Too many viewers. Starting to shape up, isn't it? Bull's looking pretty good right now. Do you think they attempt to front run it? Let me ask you that. Failed to get the new high, gets sent back down. Bap, bap, bap. Trend. Finally get above, get your new high. Bap. Blast off. Maybe an overnight low over there. Let's wait to draw that trend in. John L. making a perfect post right now in the Discord. I'm not going to repeat it on the stream. Wise words. If you have the chance, get in the Discord market chat and read what John L. is telling you. He is a quant, an actual quant. Bona fides and everything shown. Let's find out if we can establish a trend. Good morning, by the way. I hope you're all doing well out there. A whole bunch of people's going like, I got to get out of here. I got to go tell everybody I know on my Discord. Not your Discord, Cap. My Discord. Good morning to you. Good morning, look above. How are you? So, if you are a seller, let's get back to the bear thesis. Let's talk about one last thing here. Don't fare yet, sellers and bears. Oh my. I haven't put the new collar in. I got to do that. Let's do that together as a group. Let's get rid of it. Let's clean some of this stuff up. Got the new quarter coming out, right? First week. Oh, nope. Look at that. Look at that over there. Bam, 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 bam. Bam, 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 bam. Kind of fascinating, right? In this case, in March, we went up, pop the collar, party time, baby. Find out that we didn't get the rate cut and they blasted us down, right? That's the exuberance we had in this collar, isn't it? Everybody knew we were getting a rate cut. In this instance here, we got our rate cut. Exuberance. Got an election coming. Threats of crashing the market if Trump wins. We've got some election volatility. We've also got J-Pow. I always find it funny because they're like, yesterday they're like, market's paring back its expectations of more rate cuts before the end of 2025. And I'm like, the expectation's always been 50 more. Yeah, but they priced in 150 more. I'm like, that's all gambling. You're getting 50 more. That's what you're getting. Unless the situation deteriorates, that's what you should expect. I put these two in here right now because they are nope. All right. Get rid of that then. Forget the months right now. Let's think about the 31st. Let's think about the 31st to the 15th as the time to buy a dip. Buy the dip. Regardless of price. Regard of price. It is the best time of the year. Larry Williams will tell you that it's the best time right now of this year in particular to buy a dip regardless of price. Doesn't matter if it's up here, doesn't matter if it's up here. This should drive you into January, February, or March, your seasonal dip buy. The strongest or the weakest, whether we go up here and come down, whether we go down over here, that's going to be your best chance. What falls in here? Election, rate decision. Alexa, quiet, please. What else comes in here? Election is contested. Trump is elected. Shh. All right, that's it. Unplugged. So if there's any kind of like doom, Trump elected, contested, oh God, last thing down here, you're just Johnny on the spot, waiting for it. From here into that time period, market has freed up in terms of gamma. It can go higher or lower. Still consolidating, right? Big push up. Whoop. Came back down, up here, back down, slam. Up there. Hey, there's your 578, 580. 580 is right there. Gamma wall's right about there. Right? No breakdown below the daily trigger yet, right? Setting us lower and lower and lower. No break yet. Bouncing around. Plenty of opportunity to grab a high. Volatility down here, real volatility down here. Seasonality, not seasonality, but multi-year trends. Israeli war over here. Get the party started early. Hasn't happened yet, right? They waited for it yesterday. Something bad goes wrong today. We're going to crash it. Hasn't happened. Got the next date on October 7th to be looking forward to for your next window. Got a bunch of events. Got PCE. Got, you name it, you got it coming down the road. Now let's put in the strikes here. Let's do the fun stuff. Forget that. I'll just do it like this. Salam. Copy. Paste. I don't know if you can hear any of this noise in the background. Got some construction guys outside. $6020. We'll put them all in for you today. Put all 4 in. Well, look at that nice little like up and down. Oh, wouldn't that be fun? Nice little squeeze higher. You wouldn't even get there, would you? Act as a magnet at some point and then repel you at some point, right? Come on back down here. Woo! Yeah, baby. Looks kind of sexy, doesn't it? It's kind of nice, huh? Huh. Look at that. Shocker. I wonder how they came up with that right there. I wonder how they came up with that right there. Interesting. Oh, hold on here. Wonder how they came up with that right there. $45 or 40, what is it? 40 45. I can't get that close for some reason. Swoop down and trade the monthly trigger. 45.80. Oh, nope. Wrong one. Hold on here. Trash. Copy this one. Greater or lesser than 5%. 45.80. Till regime changes. Until support breaks, the expectation would be that minimum that we trade 5,800. Notice how we sold just before. Right about there. Can we trade outside of this? Sure. Start breaking me down below the daily trigger. We'll start talking about making our way lower. start approaching the upside collar, it'll act as a repellent. We can pop it, but it will act initially as a repellent. Look for some support down here on the weekly trigger. Israel attacks and does some real true major damage. We'll look for it to the downside. Target, end of year, 6,200. See it? Sounds reasonable, doesn't it? Bam, 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 bam. Whoop. Seems reasonable. $2024. One, two, three. Yeah. Worst case scenario down here. If you want to start talking about crashes, you'd be wanting to see a break of that weekly trigger, wouldn't you? You'd want to be seeing the daily trigger cross over, wouldn't you? You wouldn't want to see the daily stay up here, would you? You'd want to see the daily cruise down and cross the weekly trigger, right? You know, if the daily trigger doesn't follow, that we're not going to get that new low. That's what you're looking for your Black Monday. How much percentage points would you need a Black Monday for? About 10%, 8 to 10%, somewhere in there. About a 10% decline from where we are today. So you get your 8 to 10%. Slam down. There's your monthly trigger. Burp, 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 burp. That's like 4,800. 48. Capitulation move down. From today, that's an almost perfect 20%. That's a stock market crash, right? You want to take a picture of that? And also, remember, you can trade down on some doom and go back up here. You can do all this nonsense. Doesn't have to be perfect. You can see us trade up here, pop the collar, pull back down, and go even higher into the end of the year. But general directions, zigzags like Mr. Yen shows you, zigzag channels. There's a larger channel at play here. Stay on that trend. Break below the weekly trigger. That'll break that trend, right? If we're staying in a trend, What else can we posit here? Some sweet-ass buys along the way, right? Hopefully in the middle of the month or the middle of the quarter, you get that next buy. Hopefully. If you're a bull and you're parked down here looking for that buy, regardless of price, there's a window in there for you to get long at least one more time. Monthly, quarterly velocity tells you that there's a little more room to go for some safety as a bull. We're not topped out just yet. When we get into 26 or 25, the bull run becomes more volatile at best. When we get at 25, personally, whenever we do come back into trend, I would be I'd be wanting to see the bounce and some constructiveness first. Otherwise, I think that's easy for us to blast down, then get back into a seasonal trend. So we'll exercise more caution as time passes into 2025, 26, and 27. In case we do enter a crash scenario, maybe not maybe not a bear market, depending what the Fed does, Treasury Department does, how aggressive they get. Are we entering into a lost decade, a lost 3 years, or just some crashing up? We'll exercise a little bit more caution as we head into next year. Average bull runs are what? 1.5 to 3 years. They can extend to 5, 6, 7, 8, 9 years. Getting to that spot right now where you're like, yeah, I'm gonna, as we start buying those trend dips, I'm gonna get a little bit more cautious. Even then, though, we're not in a bear market, are we? So you're exercising a little bit more caution, right? We're not in a bear market. Even if we get the crash, you can still go higher. You would need to see the daily trigger cross the weekly trigger too. And eventually the weekly to roll over. Bloodbath below the monthly trigger. Scoop back up to let you out without panicking. Then we call a bear market, not just a stock market crash, right? So a little bit more potential for crashes. No signs of a bear market yet. Can easily price in a recession and not enter a bear market. So none of those proofs are there yet. We haven't topped on monthly or quarterly velocity yet. When we do, you will see monthly and quarterly velocity decline and prices will go higher. That will be a predictive measure telling you, watch the fuck out. We're at the actual top of a market, a bull market, and that we're going to enter a bear market. Not there yet either. SPY now pulling back. We do not want to break below what? We know that we're okay with the gamma flip. Or just delete it all. Hold on. Make it easy. We just don't want to break below what? Make a new low, right? We want to establish a trend into Thursday. That's the new low. The new low would be 565.28. for our bars right here. Nice and clean for you. I believe the gamma flip is, I think it's right about here. But we already know we can go below the gamma flip, don't we? We can't have is what? Can't break below and make a new low and then this, right? You do that, and the bulls are angry. I don't know. That doesn't really look like a bull, does it? How about we make the bulls look like a greedy pig? Almost looks like a bear, doesn't it? That's local support. That's not the gamma flip. Gamma flip is right here. That's a gamma bar. I got it wrong. Hold on here. I believe that's the gamma flip. This is local support. Nice. Let's see what happens. Looks like rag face. It was pretty bad. I gotta practice how to draw pigs. See if we can get a quick bloodbath down and buy a dip. Whoop, whoop. $1:00 in the afternoon. 12:30, we know that vol control steps in, or the put mafia steps in, right? Take a swing at it at 12:30. Take a swing at it at 1:15, 1:30. Goliath is asking a question about, is it possible to be profitable? Yes. So let's talk about being a seller and a buyer. There's a few things here. Let's talk about being a seller and a buyer. It's not hard. Well, there's a few things. There's like internet cred, where you'll get people out there that say I can be a seller or a buyer. I can be a seller. I know where I'm trying to buy. That means I have the target in my head of where I'm going to buy, which means I should be selling there too, right? But there's a small edge to being a buyer in a bull market. Small edge. And there's a small edge being a seller in a seller's market. So though I can trade both sides, I choose not to. As the years have passed and I've looked back, refining my wins, I've always been better as a buyer in a buyer's market and a seller in a seller's market. Refining it even more, I've still performed at a better level being a buyer in a seller's market. So I'm naturally a better buyer. But can I be a buyer and a seller? Yes. Is it easier to be a seller in a seller's market? Yes. I'm a really good buyer. So I do well, but most people don't. So the general thesis should be, it's easier to be a buyer in a buyer's market, a seller in a seller's market. Now, this is like bull market, bear market. It's easy. You should be making your life as easy as possible. Now, within that bull market, there are sub-markets. There are times to be buying the dip and times to be a seller of the rip. An easy way to look at that or know which one you are in is positive and negative gamma. Binky, if you could make a note of this time in the broadcast. So if you are in positive gamma, it is best in a bull market, let's say, as an example, if you are in positive gamma, you want to be a buyer of dips. If you briefly break below into negative gamma, it is still fine to be a buyer of dips in a bull market. If you make a new low entering negative gamma, you can flip to a seller of the rips. That's okay. Like, we're going to sell every rip. And that's a statistically high way to make a lot of money if you know where the put wall is. You're not entering just volatility, but you're entering negative gamma for a period of time. Now, even saying that, it's still sometimes better in a bull market to be a buyer of dips, even if you enter negative gamma. That would mean that you step away from the markets until conditions improve. That means you go above, you get price, hourly, daily trigger. Or you hit the put wall to buy a significant dip. In my experience over the years, I've operated better as a buyer of dips. It's simpler and easier. Why do I say that to you? I used to take oversold and overbought conditions, and I would execute call and put spreads. My ratio of wins to losses on call spreads were higher. Call spreads had a higher win rate than I ever did on put spreads. You ever hear people out there saying, like, this market can remain more irrational, right, than you can withstand it? You know that guy, Mike Burry, can withstand it because he's got people funding him until he's eventually is right? He just keeps DCAing and DCAing and DCAing until he eventually gets it right. But that's not you as a retailer. So, base case, if you can trade both sides, great. For the rest of you, the other 70% of you, who the fuck cares if somebody can trade the sell and buy side? What do you care? Does that person that can trade the buy or sell side pay your fucking bills? The answer is no. You should be taking the easiest path possible. This is financial advice. The easiest path possible. And then learn other trading styles. Like, scratch all of your shit to the side if you're a losing trader and take the easiest fucking trades. Those trades likely present themselves in a bull market 9 to 12 times a year. That's it. In a bear market, 4 to 6. That's not a lot, is it? If you were to just stop trading and just do that, you would build an account, a generous account. You could remove that money, put it into low-risk investments that would feed you cash and money to fund your misadventures, learning how to be a seller or learning how to be an aggressive buyer or knowing when to get more aggressive on each side or owning the stock market and selling options against it. So can you make money as a seller? Yes. And some people do better on sell side naturally. Like I do better at naturally as a buyer. And yes, you can make money as a seller if that is your natural tendency. Now, you are at a disadvantage in a bull market. Just like I'm at a disadvantage in a bear market being better at buying dips. So it's the opposite, right? So if you're going to be a seller in a bull market, you feel better being that person. I understand that. I don't hate bears. I don't hate people that live constant fear or negativity. I got nothing against you. I get it. People are different. We're all different people. Some people will feel better like that, right? I get it. We're all human. We all have different personalities, different styles, different how we do things. So I get that. But you have to be conscious of the fact that the cards are stacked against you. Recognize that. Cards are stacked against me. And they're mostly stacked against me in bull markets. So the one issue I have in public is we're in a bull market. And we consume things out there that say like market crash, market crash, market crash. I'm short, I'm short, I'm short. Cacophony, cacophony, cacophony. And the only thing that bothers me is that it's like, there's easy ways to get bearish or call a top. That's not a put spread, right? There are other ways to get short. You can just sell calls, fucking OTM calls on a high if you own SPY, and that's being a bear. Vol Wiz discussed that last week. Do we have call development up to fucking, 6,400? No. Just sell those fucking calls all day long. They ain't going there. You can be a bear that way, safely. Take ratio spreads, safely. Go to SDAO and look for a major bottom and a turn to the upside. Clear as day. SDAO, you know why I like SDAO? Because there's no fucking volume in it. Like when you look at SPX, it's hard to see where the volume is. It's like, because you got too many people with too many opinions. You go to like a ticker that has no volume, like SDAO, it's like lifting the skirt up on professionals because they jump in there only when it's actually bearish. So like if you want to see when it's actually bearish, you'll see a lot of money flow into SDAO. Then they leave when that risk is away. And you can see it clear as day. You don't need to be a rocket scientist. You can just see it. Money's coming in, coming out, coming in, coming out. Try to look at SPX, and it's all over the fucking place. That's why I like SDAO. Clear picture. Those people are probably pros. Probably a guy in an office in a basement in a strip mall, went to school for it. That guy knows the fuck he's doing. A little bit clearer picture there. Ratio spreads. If you're wrong, especially on something that moves, can't do that on Clorox bleach, right? But you can do it on SPOOs or NQ. Do a ratio in NQ. NQ is always fucking moving. Up, down, Widowmaker, right? And ratio spreads, you can build ratios in different ways, right? But they're way easy to not blow yourself up. And there are times to get more aggressive. You do ratios for bulls, too. You think this is bottom, or you do just a spread and say, I'm going to put more time on it. 3 months, 2 months. Instead of a week, hey, Cap, why don't you just do zeros, eights when you think it's the bottom? Just slam the buy button. I'll do that. But that's a compliment to my actual plan. Buy the SPY in a low is probably the safest. See a major low, what's the first thing you should be doing? Or me, buy the SPY. Don't even execute a spread or a ratio. The safest thing for me to do is buy the fucking SPY. If I get a quarterly low and I think we're close to it and I just add the SPY and then I fucking sell options, OTM puts, fucking wait for a fucking div payment, whoop, baller. But how do you make money as a seller, right? The question is, Cap, you said that puts don't pay. What do you mean by that? So puts, originally you could only buy and sell the underlying asset, shares, stock in the stock market. Then we came out with calls. You couldn't even buy puts. Did you know that? I think calls came first. You couldn't even buy calls. Calls were structured for making money. This actually ties into futures too, protecting investments and stuff. Like futures was created as a hedge in after hours, and then we made puts, and puts were created as a hedge. They weren't meant to make money. They're not built like the literal. They're not built the same as calls. Now, they've been manipulated and used and can pay tons of money. They can pay fast, but it's made 1,800%. The puts are not built. They were never meant to be used as a way to make money in the stock market. They were built as a hedge. Now they are used in that fashion today. And you can do complex trades with them or add them to complex trades that can make you a lot of money, can't they? In my trading experience, I can't tell you how many times I've bought puts, right? When I say puts don't pay, how many times they've burned, how many times they were priced in, how many times the market has reversed. And even when I was in the money, I would lose. So puts don't pay in bull markets for sure. Do puts pay in bear markets? Yes. But we're not in a bear market, are we? It's always the easy button. What is the easy button? And that is the way to go. Overcomplicating your life. I don't know why we do it. I don't know why it happens. And the danger on the short side is way different than the long side, isn't it? It's 101 trading. Your losses are infinite. You sell calls, losses are infinite, right? You're short, losses are infinite, theoretically. If I buy a zero date, burns, gone. There's nobody calling me up with a zero date call going, hey, Cap, your call's burned, bro. Will you owe me now $100,000? You know that 10 grand you spent, that 30 grand you spent? Sorry, bro. You got to pay back 90. There's none of that. Right? Now puts, those burn too. I don't mind puts. You're not on the hook for that, like selling calls. That's not fun, is it? Short a stock, that's not fun. I've been there. I've gotten burned. That shit ain't fun. I've been on margin. Been on it. Been on millions. Actually, been on millions of dollars. Not millions given to me, but I've been on had $1 million of margin against $1 million account. That was I literally the first time. I use margin today, but I mean I use margin for spreads and shit. But I was using margin for fuck yeah, let's get in the market and get aggressive. That shit ain't no fun. You guys should talk to Joe Donut sometime about being on margin in the market, even as a bull. Ask him about Tesla bulls that used margin when it started to ramp. And now that it's coming back down, what's happening to those bulls? No one likes to talk about that. Why are some bulls angry in the Tesla community? It's like the dirty little secret. Margin. Margin sucks. Maintenance on margin. Oh, man, it just time passes. Theta against margin. Oof. Fees, if the price doesn't move, that shit compounds every year. So, I remember I was trading Tesla way before COVID. way. Way. I was trading the old 2017, the marijuana shit. I remember all that Canadian marijuana trade. I remember that whole thing. I used to be I was a crypto trader, and then I was a stock trader. pump and dump trader. Traded a bio crap. Then got serious about options I don't know, just before COVID, and then Wall Street Bets did me in, and then COVID came and took it way more seriously. At any rate, there's just easy buttons, and it's always better to do the easy button. That's how you don't know what people are doing. Like the easy buttons to buy the market. You don't know what their how much money they have, what their exposure is. That guy's buying 100-pack of zero dates. What percentage of his account is it? 0.02? And you're like, I'm going to run a check on that trade. Or can I withstand 100 trades, or can you withstand 10 trades? Right? Can I run zero dates 100 times, and maybe you get blown up at 10 times? Maybe you get blown up at one time, and I get blown up at 10 times. Shouldn't be copy trading other people either. You should be trading your own plan. And your own plan probably includes your own trades that don't include my trades. And vis-a-vis for anyone you know out there. But the recommendation is always to start as safe as possible. Take your money out of the market. If you ever hit it big, like immediately remove it and put it into something that makes you more money that you can piss away in the stock market. You can be negative, it's fine. And you can be sell side too, that's fine. I don't think it's a bad thing to be negative or a seller or whatever. If you operate better on that, it's not easy being a seller. If you look at hedge funds, these are the smartest beep. Look, if you look at the history of sell-side hedge funds, right, they blow up all the time. All the time. There's a lifespan being short. Even recently, the past 5 years, if you're not a seller or you're an amateur seller, ask a sell side, like a long-term veteran of sell side, and some of your heroes out there, even they're saying right now it's not worth being sell side anymore. It's very difficult. It's very dangerous to be on sell side. Back in the 70s into the 90s, there were sell side hedge funds in the U.S. that were blowing up every other month. On sell side in other countries, Japan in particular, but it's not easy being sell side. I don't know what sell side people are telling you how to do this, but if I was sell side, I would be very soft touch and then get more aggressive with known resistance points until you're in negative gamma or a bear market. In and out. Take my money and run. When you're in a bull market, it's going to keep squeezing up and up and up and up. In a bear market, you'll get that bam, bam, bam. And you might be looking at major pullbacks in the course of a year and say, well, I fucking missed that. Right? I missed that big down move that quarter. Don't let that eat away at you. Still be a surgeon. You got to be a surgeon. Being sell side is not easy. It's a hard life. I fuck with sell side all the time. Not because I hate them, but because they have to be so goddamn surgical to make money. In, out, make your money, and exit. You got to be like that. It's horrible being on sell side and you get a margin call as a retailer too. It's like nightmares, roaming the streets at nighttime, drinking bottles of whiskey, and then when you pay it all, if you get caught in that, I've been caught in that. You get caught in that. You might not trade for 3 months. Think about that. 6 months. You might not trade. You might not trade for a while. It's devastating to your id, to your ego, to all these other things. All these people yelling at you haunt your mind. You see them come after me on FinTwit. They'll attack me on FinTwit. Why? because what you're saying is haunting them. They are thinking about that shit posting you're doing. Why? Because they were loosey-goosey, weren't they? Dangerous shit. Eventually, though, they could turn around and they become better sellers. It's like being in the army and a drill sergeant yelling at you, "You're doing it wrong. You're doing it wrong. Push, 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 push. Keep pushing. Go to sick call. Get back here. Push again. Push again. Supine bicycles. Are you fucking crying yet?" I hate that fucking drill sergeant. But you know, one day you love him. You realize they were trying to get you to break, teaching you that you're stronger than that. Bob, please call Netanyahu to commence war. I just want a quick drop. Can I just get a quick drop over here? Can we establish some kind of a trend, please? There's some kind of a trend here. Hold on. There's like something over there. I don't know if that's real or not, but we'll leave it there just as a place marker. The army is a lot like trading. The military is like brutal. And then it doesn't stop there. Once you're deployed and shit, or not deployed, but once you go to like your permanent station, you're just getting started. You know, it's brutal. You're like the lowest shit bird in the totem pole, and you're treated as such, and you're given zero responsibility, and you find out your MOS, you fucking know nothing. But the military is a great thing. Military is like very similar to the stock market. It's brutal. And like, I know when I was young, I was always afraid, right, of the military. And they just beat it into you. And the stock market's the same way. They'll just beat it the fuck into you until it gets through your goddamn head. Remember, we don't work on fees here, do we? Like, these guys are on like FinTwit. I'm like, these guys got fucking fees. They get money under management. They don't care if the market's going up or down. You and I do. We're listening to them. They don't give a fuck. They're out there like fucking drawing crayons and shit. I'm like, these guys got fucking money under management. They're not even trading their own money. Like, they are smart as fuck, but you know, I bet you if it was their money, they'd be a little bit more patient. Good job, David AMS. Fucking drawing it out for these people, David. Look at crayons, man. I'm like doing the crayons for him, bro. No, this is support right here. We're on support. Even if we go like this, it's still going up. Easy part of the trade right there. A little bit of wham wham. Bull's trying to take over here. Half an hour trigger's moving higher right now. See it? Half hour trigger's predictive. It's coming higher. Looking for a cross. cluster, 4-trigger cluster. Hasn't proven itself yet, but we're trying to get up there for a woohoo. Shit, we got all day long left, too. It's early. Go Bears! This ain't looking good here. No confirmation yet, but the hourly and half an hour trigger trying to turn up right now. Let's check out 30-minute velo and see if that'll tell us anything. Ooh, that's juicy. Not quite a low yet, an hourly velo, but it looks good. It's almost ready to rock. See that right there? You start getting those higher lows, woof, to the upside. That's intraday. Sell, buy, sell, buy. Bears need a hero right now. They need an event. SPY also coiling here. See that? A little bit of coiling going on. Wham, wham. Bam, 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 bam. All right, I'll say it with you. I agree. Who said that? Come on, go Bears. I don't know who said that, but I'm with you. Dog breath. I'm with you. Let's go Bears. Why can we trade 4,800? Does anybody know? Because everybody's short. You're all loaded to the tit short right now. You guys were loading the fucking bus with puts yesterday. God damn. I couldn't believe how many puts were bought yesterday. You guys are buying puts like shovelfuls of them. I'm not a Bear fan. I'm from New England. I'm a Pats fan, number one. Second fan of football, right? I'm a fan of Patriots, then Detroit, naturally. Mostly because they've never won a Super Bowl. They've won an NFL championship before the NFL, but they've never actually even, they're undefeated in Super Bowls. You guys understand what that means? They've never actually been to a Super Bowl. So they've never actually been defeated in a Super Bowl. So I've always had something in my heart for Detroit. I've always liked the Cleveland Browns, too. They were always like the Browns, like another team like Detroit for me. I'd fucking love to see the Browns win a Super Bowl. Cleveland would be off the fucking chain. Sorry for swearing. Cleveland would go bananas. Like, can you imagine hanging out in Cleveland, like during a Super Bowl, or like the run up the playoffs? They would burn Cleveland to the ground if they won a Super Bowl. You got to remember, I'm from Boston. I grew up with like the Patriots that were horrible. They'd never won anything either. We were famous in NFL to put like the best quarterback that could never win. You know guys like that, right? Technically awesome, best stats, can't win to save their ass. Like being a winner is way different than being good at what you do, isn't it? Like winning is its own thing. You don't even need the best talent to be a winner, do you? You don't need to be the smartest, toughest. To be a winner is a whole nother thing. A whole nother thing. You learn that. If anybody in the military, you know that, right? You're in the military, you'd be like, that guy's going to be the G.I. Joe. And that guy's not G.I. Joe, is he? You're like, oh, shit, I just found out. He was great at everything, and then he fell back or held. He didn't fucking move forward. What the fuck is that guy doing? It's a whole different world, right? Being a winner. And I grew up with the Red Sox, right? They hadn't won a World Series since, 1918? Generations of people with no championship. Now, it's not like that anymore, but, Bruins are always great. Celtics are always fucking great. Great goddamn teams. I miss the 80s. Like, the 80s, basketball in the 80s was insane. The rivalries were insane, like storied rivalries, basketball and hockey for Boston in particular. Dude, Cubs winning the World Series was magical. It was magical. I agree. 100%. If Detroit's in that window where the NFL is fake today, they kind of like preordain you. Okay, we're going to give you this and we're going to give you that. You can go to the playoffs, but you can't win. We're going to give you 3 years. Your third year, you can win the Super Bowl. Detroit's in that right now, where they're like favored, a little bit of favoritism. They want Detroit to win or have the opportunity to win. Detroit will melt down if they win. If the Lions actually win a Super Bowl, they won't burn the city down. A lot of people think that people burn Detroit down. That was 10 years ago. Longer now, 15 or 20 years ago. They don't do that shit anymore. Detroit loves their city. And the people that stayed and helped rebuild it, they take a lot of pride in Detroit. Like, Detroit pride right now is epic. They're in like this protective phase in Detroit. People are in general. But the party but the city, if they won, I don't think they'd burn the city down. Cleveland, they probably wouldn't either. I've heard they've had a resurgence too. But Detroit in particular would probably be an insane party. Now, that's what they would probably do. If I had to guess, they would not burn the city of Detroit down. But the party in Detroit would be out of control. I mean, people would come home for that shit. People that abandoned the city would come back. This city would, overnight, likely, I think we have 600,000 or 700,000 people right now. Right now, I bet this city would go to 1.5 million. No joking, but 1.5 million. 300,000 influx of probably minimum 300,000 to 500,000 people would pour into the city from the state, and then people would fly in for that party. And that party would probably last 3 to 5 days minimum. Detroit knows how to party anyways. When they do a holiday here, regular, it's a week-long party. Every holiday, it's a week-long fucking party. Shit lasts like 7 straight days. They like pre-party, party after. This city does it right. They're not quite New Orleans. They're not fake Vegas, but they know how to celebrate here. They've been through so much shit that they enjoy celebrating. When they get the chance to do it, they do it. And if Detroit won, this city would blow up. It would be out of control. I don't know what would happen. I mean, I don't think it'd be anything bad, but the party would be insano. It would. Oh, dude, I want to buy this so bad right now. Oh, I want to buy this so bad. I want to buy like a call spread for Thursday or Friday. 567. Let's look at call spreads. 5-6. All right, let's look at some call spreads. Like if they win the Super Bowls, right? If they win the Super Bowl, right? This city will. I mean, it'd be like if you were living in another country, you'd be like, I gotta go home. My mom, my dad, my aunts, my uncles are calling for me. The pipes are calling from Detroit for me to go home. That would probably happen. People would travel just to come back and see their city. Boston was like that. People will, like when Boston won the World Series, my family members go to graves and put memorabilia on graves and take photos and shit. I kid you not. Like I had family members, like it was like an emotional, insane ride. If you were in Boston during the World Series, when the first World Series, it was out of control. Or if you're a native of Boston, I should rephrase that. It was a completely different experience. Not the kids and the college kids getting shot with tear gas and shit. If you're like a native Bostonian, it was a different experience. Okay, call spreads. What are we doing here? Call spreads. So we've posited a plan now, right? Haven't we? We've got some. We could do ratio spreads. We know that there's volatility in the market, don't we? We're trying to take call spreads in the weakest second half of a 2-month weakest time of the year right now. Pretty dangerous, right? We just got out of the weakest 2 weeks of the weakest 2 months, even though we're entering the weakest second half. Of the year. So ratios could be on the table, couldn't they? There is some risk. We know that there are risks. Israel's risk, right? It's real risk. We also have some other risk in the market right now, don't we? We've got we've got ISM services PMI tomorrow. We've got claims tomorrow. We got claims at 8:30 in the morning. We got ISM services PMI at 10 a.m. On Friday, we've got non-farms and unemployment. We've got some shit ahead of us, don't we? We got some danger here. We've got Israel in the background. We've got a not mafioso union boss threatening to take down the entire country. Guys driving a Bentley. Guys wearing Greedo rings. You see his ring and his creepy fat hands? Dude, that guy's hand is the hand that I'm talking about. That union boss, take a peek at his. You guys see his hand? It's like bloated and fat and creepy and veiny. I'm like, that's a rich man's hand. I'm like, that's the guy. That's the Wall Street rich guy. I want to put my hand in his pocket and take some money out of it. Like that guy is creepy. You ever hear him speak? You're like, that's a mafioso. I know mafioso speak. That guy's mafioso. Like that guy's who take down the entire country, the entire economy. I'm like, how much does that guy make? Then I found out how much he makes. So I was like, oof. You guys see his hand yet? Hold on a second. You guys haven't seen his hand? Let me see if we can find it right now. I'll blow up his hand really quick. Where is his hand? I had a picture of his hand yesterday. It was gnarly. Hold on here. See if I can find his hand. I'll post it on FinTwit. Yeah, right here. I got it right here. Hold on. I got it right here. Hold on a second here. Look at this guy's hand. Where's that goddamn thing? Hold on a second here. They're probably gonna send the mafia to come kill me here in Detroit. It's probably a mafioso listening in right now. Like this guy's been shit posting on Twitter for like 2 days. Get the boys up in Grosse Pointe to come pick his ass up. Hold on a second here. This is a gnarly. I have posted this. Look at that hand. Hand is terrible. See that gold in that ring? See that gold fucking ring on his fucking, see that ring right there? That ain't no wedding band. That hand slides in the pocket and there's probably like a billfold in there with like 20, 30 grand in there. You don't want all of it. You just want a little bit of it. He'll never even notice. Peel off a few $100 and walk away. He'll never even notice. Yeah, with a ring like that in your hand, I guarantee he sticks his hand in his pocket and he pulls out like a wad of hundreds. you're just like you're like the grandkid. Slip off a few of them. Your granddad doesn't even notice. Those are probably walnut hands, aren't they? I bet you if you look at Jamie Dimon's hands closely, they look just like that. Just like that. All right, let's get back to call spreads here. Absolutely, Ned Confetti. To Pikachu. Oh my God, the Discord right now is hilarious. All right, let's talk about call spreads right now. What's going on, right? What's going on, Bears? Am I late to the party? Am I being left behind here? The people in the Discord are talking about sucking the ring off this guy's hand. They don't even want the $100 bills out of his pocket. They just want to like crawl up to him and then like wrap their lips around his finger and suck it off, suck the ring off it, sneak away. It's so terrible. So gross. It's so nasty. Sorry. I feel like a 13-year-old reading Mad Libs right now. Sorry. I'm not supposed to be laughing like this. Okay, so we're going to look at Friday. Friday call spreads. Yeah, that Friday call spreads. We got that PCE coming out, right? Well, we got an event there, piece of fade the reaction, right? Got a little bit of doom tomorrow. We don't want to get crazy. Today is the 2nd. 4th. Expected upside range into the 4th is 577. Interesting. 577.18. Bulls expect 577.18. Bears expect 450. Sorry. 568, 569, 575, 250. That's a kind of a shitty spread. It's not that good. $570, $575. How about raising that strike to 77? Ooh, getting better. How about 574? Ooh, 80 for 220. 574 to 577 pays $80 pays 220. Roughly around there. That's a pretty good trade. Risky, but it's a good trade. You could do something even more in the money. You could do like if we know that support is somewhere in here, right? Let's go over to the trigger screen. If we think support is right in here, we could even look at something lower, like what's that? 465, 467. What does that pay? I mean, 464, 467, time-based trade. You risk 207, but you make 93. That's not bad. You just got to stay above support by like Thursday or Friday. That's pretty good. I mean, it's theta-based. Not bad. This is simple trades, right? Not too hard. These aren't even bull ratio spreads. You could do a ratio so that if the market crashed, you could do a ratio spread just into Friday. Starts Wednesday at 6 p.m. You could put that out to Friday or something, but if something were to go wrong, like war in the overnight, your trade would be protected. We have volatility right now. There's no reason if you were going to get long here. If our thesis is that we're going higher, and something bad happened, you could go to a bull ratio spread. You want to look at that really quick? You guys want to look at a bull ratio spread? We've talked a lot about, I talk to bears mostly. I don't ever spend time talking about bull ratio spreads. A bull call back spread option strategy, right? How about Options Industry Council? Bulls are like, Cap, you're always trying to protect bears from blowing up their accounts. Why don't you ever, I'm a bull and I'm always losing. So if we look at history, we got a target right around here. 573. Right around here, 573.43. Nice round numbers, 575 or 570, right? A little bit higher. Maybe we could put more time on them. We could do 90 days. Shit, we go up there now. You're cha-ching money, baby. Risk, volatility risk, of course. We are at a time where we could wake up and the market could crash. We could have an October Black Monday or something, right? This is the Option Industry Council. I know people try to sell you courses. You know how do you know Jedi Marcus? Do you know Jimmy Jude? Do you know old school floor traders? They used to work at the CME. Guess what these guys do? Some of their money goes towards a nonprofit to teach you retailers for free. They have a website called optionsindustrycouncil.com. If you don't know about these people, they are there for you still. Shocker. I would always recommend that you go to their website, download their YouTube videos in video and audio formats, and I think they even have a library on their website. They used to. And download all that shit and just play it in the background. Play it all. Play it all, play it all, play it all. You might not understand it. Who cares? Play it over and over and over and over and over until you do care, until you do understand it. Or you do listen to people out there and you go, oh, yeah, I've been listening to that shit. I know what flies are. I know what broken wings are. I know what this is and that is. Somebody's talking to you about it on FinTwit. Somebody's talking about it to you inside the Discord. You want to become a pro trader. You want to get a mentorship with David. You do that stuff right there. Over and over and over and over. Paper trade it, paper trade it, paper trade it.
If you're bullish on a stock, index, or ETF, the first option strategy that typically comes to mind is the long call. But there are other strategies to consider, particularly
The first option strategy a DGen considers, a long call, preferably a zero date.
if you expect a sharp upward move and want to incur a lower cost to participate in your bullish forecast. With the call back spread, the risk is defined and limited, while the reward increases as the stock, index, or ETF increases. The call back spread can sometimes be set up as a no-cost trade, whereby an investor creates a ratio of 1 short call and 2 higher strike long calls.
1 short call and 2 long higher calls.
This is a 1-by-2 back spread.
1-by-2.
The idea is
Did you know that you can do 1-by-3 back spreads too? Some of you know that. People that have been in the market for a while know that. But this is a 1-by-2 basic call back spread.
to finance the 2 long calls with 1 short call. Sometimes be set up as a no-cost trade, whereby an investor creates a ratio of 1 short call and 2 higher strike long calls. This is a 1-by-2 back spread.
So we got to do a short call, right? And 2 long calls. Okay, I gotcha. What else do I need to know, Option Industry Council?
The idea is to finance the 2 long calls with 1 short call. Depending on the strike prices chosen, the investor may enter the trade for little cost, no cost, or sometimes even a credit. But it is most important that the choice of strike prices matches the investor's outlook for the stock.
So listen to that again.
Choice of strike prices matches the
One more time.
investor may enter the trade for little cost, no cost, or sometimes even a credit. But it is most important that the choice of strike prices matches the investor's outlook for the stock.
So that might be a little bit too aggressive up here, right? We've got a target of 6,000, another target of 5,800. Historically, we don't get above this one right here, do we? So maybe we rein in those long calls. or we put more time in the trade to capture the 480 or even the 6,000. You date them for January. If you date them for January, maybe you bring it below 6,000 on the expectation of selling it. Maybe it's 580, 578. 90 days out. In terms of Friday, maybe you make that strike 573 and 570. Over here. Rein it in a little bit. All right. What's next?
By design, the short call increases in value as the underlying moves higher. However, the combination of the two long calls will typically offset the loss on the short call to a certain degree, and eventually the position acts like 100 shares of stock if the move is large enough. If the investor is wrong on market direction and the stock is below the strike price of the short call, the investor might break even, or in the case of taking a credit at the onset of the trade, may even achieve a profit. However, be aware, with only a moderate move higher, the trade can have a loss. Let's look at an example. Suppose an investor is bullish on XYZ stock, currently trading $62 per share. To create a call back spread, the investor sells a 65 strike call for $2 with 90 days to expiration. At the same time, the investor also buys two 70 strike calls at $1 each with the same expiration date. Once established, the investor has at the same time, the investor with only a moderate move higher, the trade can have a loss. Let's look at an example. Suppose an investor is bullish on XYZ stock, currently trading $62
Currently trading 569
per share. To create a call back spread, the investor sells a 65 strike call for $2 with 90 days to expiration. At the same time, the investor also buys two 70 strike calls at $1 each.
So you sell a 570. Now we're looking for Friday, but if we were going to do, let's say, a 90-day call ratio spread, we could change this, couldn't we? We could make this a 578 or a 580. You could make this a 575, right? So 580, 575. You could even bring it under in case it rejects. Do a 578 and a 575. Price is currently at 569. Sell the 570s. 90 days, you might even get more aggressive. 588, 586. Date them for January. You get 3-4 shots at it. Sell the 570. Even if the market goes down, you'll have time on it to come back in the money. If it goes down, you'll also be break even. You could actually take the money on this side of it and leave the calls on for the eventuality of getting up there. So she said 90 days. You could actually probably do 6 months if you wanted to, 4 months, just in case we crash. The back end of that trade could come back into the money and print for you, right? Print big. A buffer of a couple extra months. She gives an example of 90 days, but you could do 4 months, 5 months, 6 months on them. Fairly easy trade. Think about that. You could actually put risk on to the upside from here into Thursday. Be wrong. If you put enough time on it, go down, come back up in a month, and they print. Not bad. Margin.
With the same expiration date. Once established, the investor has the XYZ 6570 call back spread for a net cost of 0. The best scenario for the callback spread is if the stock moves sharply higher by expiration. For example, if the stock rises to $80 per share by expiration, the short 65 strike call is worth $15. But the long 70 calls are worth $10 each, netting a $5 profit between the longs and the short, or $500 per spread. Remember, the investor does not have to wait until expiration to take the profit on the trade. If a move higher in the stock is sufficient enough for the gains of the two long calls to offset the loss in the short call, then a suitable profit can be taken at any time during the life of the trade. It's at expiration where the greatest losses occur between $65 and $75, with the maximum loss at $70. That's because the investor would lose $5 on the short call, while the long calls would be completely worthless. Above $70, the long calls are in the money and completely offset the losses on the short call at $75. Because the maximum loss doesn't take place until expiration day, the investor may consider closing out a call ratio back spread well before expiration. If the stock closes at or under $65 at expiration, the investor would break even on the trade, and the only investment loss is perhaps the commissions paid to enter the trade. This type of trade has been typically placed in advance of a very positive earnings outlook or product announcement in anticipation of a swift and dramatic move in the stock. If you happen to be looking for an option strategy for a bearish outlook, you may want to consider viewing the put back spread video.
So if you put enough time on that trade, pretend that's end of year, and the market at any point goes up here, woohoo! Now or later, woohoo! You're in the money. You could close those calls out, right? Bam, bam. Bam, bam. You could actually leave the bearish trade on and hope that it goes down before expiration, couldn't you? Right? If it continues higher, you want to be out. Well, you want to be out before you get above that too, right? But you have the chance of making money on the back end of that trade, don't you? If you don't, you have time into expiration if it's way far out here. And you have to have a thesis that, by January or March or April, we're going to be higher than currently at 570. She also mentioned earnings season, and we're coming into a new quarter, aren't we? So maybe this doesn't work for today particularly. But what the hell is that? But we talked earlier in the show about how there's a seasonal low expected in November, October 31st, November 15th. Even if you don't take this trade today on a short-term basis, I would be thinking about this trade regardless of price in the market. Forget the dates down here. sometime in that window of October 31st and November 15th for trade into March, right? That would be the low for the season. And you're entering earnings season for Q4. She mentioned that, didn't she?
Learn more about the callback spread and other strategies. Visit the OIC website at optionseducation.org.
So head on over to optionseducation.org. You can actually read papers on the mechanics of these trades. If you don't understand these trades and the mechanics of them, you can paper trade them. If you go to optionsstrat.com, optionsstrat.com. I've got no affiliation with those guys. Optionsstrat.com. You can go there and paper trade these trades. And it's not real. They're like fake fills and shit. So you're getting like best price and best this and best that. You're not going to a broker to negotiate those prices. You've even talked about that yet. You can actually call your broker and get good fills at the right time. Hey, sir, can I get this price, not what's being offered right now? Believe it or not, you can build those strategies along the way too, can't you? There's a lot of other shit you can do here. Like best time to buy or sell a call or best time to buy or sell a put. And you can directly call your broker if you have a real brokerage. Someone's asking me about I need to own shares. If you don't own shares right now or don't have margin, start getting shares. Start getting some margin. If you can't even afford that right now, go to a paper trading site and begin to learn the mechanics of this stuff. Because when you do blow up your account, you're going to look back and say, God damn it, I've been learning about those back spreads. God damn it, I've been learning about those butterflies. I've been learning about those condors. On the Options Industry Council, I've been paper trading them, right? And that will trigger in you, at some point after enough pain, the decision to say, fuck this, I'm going to start buying shares. Fuck this, I'm going to put some money in and get some margin from Robinhood or whatever the fuck it is you want to get your margin from. Tasty Trade, IBKR, whatever it is. You'll make that decision. But you won't make that decision if you don't start down the road of trying to take easier trades. And this time of year, it's not bull season, is it? We're not in late spring. We're not heading into summer when we're at our most bullish. We're in, even if we're going to continue to go higher, what's considered a dangerous time of year to be executing longs. Make sense? $50K is nothing. You guys think $50K is a lot of money? $50K ain't shit. If you think that's a lot of money, that ain't, not to be in the market, that ain't shit. You can get $25K in margin in a second. Now, let's say you don't have $25,000. Let's say you don't have margin. What did I recommend? I said go and open yourself an account at OptionStrat and paper trade it until you do. Now, let's say you don't have that. You've got OptionStrat and you still want some exposure without margin. You can still take trades with a little bit more risk. You can buy a share of SPY for $569, and you can add those until you have 100. You go to work every week and buy a share. What's a little bit more risky trade that you can take, but not as risky as 0 dates or 1 dates or weeklies or any of those things? What's another trade you can take that's not as risky as 0 dates and weeklies? You can take a call that's a month out in your price range. You can take a call that's 3 months out in your price range. You might not make as much money, but you can do that kind of stuff, right? Make 5%, 10%, 20%. If the market begins to roll, you can likely get out before that call burns. What's another strategy to get some exposure? Hold on here. Ah, shit, we're already breaking out. God damn it, I haven't even placed a trade for myself yet. I'm losing my opportunity here. I'm losing my opportunity to enter a trade here. A call spread, right? We talked about those before we looked at the ratio spreads. So call spreads, you don't need margin for a call spread, do you? Do you guys need margin for a call spread? I don't think so. You can go to your local neighborhood Robinhood and open one of those, can't you? A little bit safer. What makes a call spread safer? You're either fighting for theta, right? A theta trade and a call spread, or you're fighting for a directional move, and you can withstand up and down movements, right? You can be wrong a little bit. So if you have, let's say, a call spread, just a basic debit call spread, and let's say you have a target here of Thursday. Let's go to a 30-minute chart. Target over here of Thursday at 1 o'clock, let's say. $130 right there. That's your target. You have a bullish perspective. You don't need margin. You have an event. You got unemployment PCE on Friday. You already know, fade it, sell the news, sell the reaction. You don't care about that. All you care about is that your thesis is up here. You don't care about selling over there. Matter of fact, if you were to fade that trade, right? You're long a call and short a call. That's simpler than a ratio, but you're long a call, short a call, right? Hold on. God damn it. Make that smaller. Get out of there. Long a call, short a call. Dun, 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 dun. Let's say that's just as an example. Long a call, short a call, right? Dun, 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 dun. Hitting a Friday, right? Woo! Making money. Yay, right? If I were to open that call spread independently of each other and not just a package deal, right? On Robinhood or whatever, and you close just one side of that debit, the long call, right? And let's say that short call comes down here in a Friday close, you can make even more money than you thought. If you don't have any margin, you can close it right there and be done. If price along the way at least stays above, you can withstand all this move to there, can't you? There might even be a break even if the price is already going in your direction. You could raise your stops along the way, couldn't you? And never lose any money, could you? Or even just at least break even. Another cool part would be if you were able to, if you had some margin and you could take this, just a basic debit call spread, and let's say it reverses on you before expiry. Over here, remember that, expiry. And you're bullish. You got that long call, market starts going down, that long call, you're like, oh shit, we break underneath and make a new low, and you're not at expiry yet. You could close that long call. It won't be worth much, but you could close it and leave the short call on into expiry and still make money. A lot of management in there, but, you're not blowing your account up, are you? So you do have some options in here instead of saying, slap the Friday's calls. I bought calls Friday cap weeklies. Back in the day, you could do that and the market would go just like this. Into a Friday or a Thursday or Friday. That's what the market used to do. You're like range bound. Fairly simple. You know what the market does now? Market goes just like this. Wham, 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 wham. When you're in a weekly call, by the time you get up there, you've got a hoopty. You got a broken down weekly call. Looks terrible. It's awful. Those days are over of buying weeklies, in my view. You'll probably be more in the money like today and today or tomorrow at the open. Just get out of that weekly call. Might as well have just bought a one date. That's why people trade zeros and ones. 0 dates and 1 days now. Market has changed. High frequency trading firms are in here doing all kinds of nastiness. So you're stuck with like 0 dates, 1 dates, probably get a print, get wrecked the next day. Or you got to be trading futures, SPX, more stability in price, or some spreads. Or own the underlying. Start buying the actual SPY. If you ever accumulate 100 of them, and the market starts to crash, you can go, oh shit, I'm going to sell some calls up here on that 100 pack I got. Make sense? I'm going to sell short my underlying. Protect that investment that I have. Maybe if I'm mixing up words here, I apologize. If at any point I'm making minor mistakes, this is off the cuff. So this is not a prepared, recorded video where I edit it. So I do apologize if I'm making small mistakes along the way. But I do want you to know that I may do that because this is live. This is not recorded. I'm not reading from a script that I wrote. So I do apologize if I'm doing that. But you get the thesis of this, right? You get the theoretical idea of this. Starting to develop a trend here. Spent the morning going over the thesis. Can I be wrong with my thesis? Yes. Being a market participant involves you coming up with a plan. It involves you not drinking the bull or bear Kool-Aid. It involves you saying, I've formulated a plan. I looked at all the outside danger, outside risk. I know what the risks are. I know what I'm looking for. I know what the history of this is. I know what the expectations are. I'm now going to formulate a trade plan and take on the risk that I'm willing to accept and know every outcome so that I can manage my trade if and eventually when it goes against me. Or I'm short and it goes up. Not sit there and say my thesis is still up as price is going down. Adjusting to my thesis being wrong and managing my trade, having the ability to manage my trade. Having the ability to make money if it goes against me. Protecting my trade if it goes against me. When you see people on social media that say to you, you're bearish, market's going up, You should stay bearish. Wrong. You will never survive in this market if you can't adjust to your thesis being wrong on any time frame. You need to know where the boogeyman is. Going down and we go up? Where's the boogeyman on the upside? Where do I start losing money? How do I turn this? How do I roll into something that's going up? Do I have enough time? Your thesis is up. We start going down. Do you have enough time to come back up? Can you go short and stay long later in time? There's like all these big, like, well, not big, but and before you even enter these trades, are you thinking about all of this? Or are you not? Are you slamming the buy and sell button on 0 dates, then going on social media and telling people the market's going to crash with $500 and expecting to be taken seriously? That's not nice. Doing that to a retail trader is not cool. You should be thinking about your entries, your timing, your exit, and how you're going to manage it. And never fall for anyone out there telling you that you have to stay married to a thesis or that your plan is always going to be right. This business is about being wrong. If you're going to be a retail trader, you are going to be wrong. Accept that. You're not a bad guy for being wrong. Don't let anybody out there tell you you suck because you got it wrong. You need to be able to manage a trade from start to finish. That's how you will win. Then when you're only winning 7 out of 10, the 3 that you lose, you can manage those losses. If you're only a trader that wins 5 out of 10, managing those losses will help you to win more, make more money. There are gray areas there where you can be a winning trader and not even win 7, 8, 9 out of 10. I like SPLG and SPR and all that, but do they have good liquidity or no? I've always heard there's not enough liquidity. I could be wrong there. Maybe it's improved since the last time I looked, but. And there are tax stuff you got to look at. Like there's taxes and there's all kinds of other fucking nonsense, but why do you use SPY? Why do you use SPX? Why are you trading 23 hours? Why are you doing futures? People have different reasons for different products. There's good, better products to express this stuff, depending upon your situation. We got here 567. Oh, I wanted that tick down there. Remember, we've got volatility tomorrow and volatility on Friday. We had volatility this morning on the open. You may get another dip buy down here for a call spread. May be able to get in down here on an open tomorrow. You got to decide, can you withstand that low in the open to go higher into Thursday or Friday? No, I don't think anything you're saying is stupid. I was just talking about the product that you're using. That's it. Not discussing trade. No, where's the boogeyman? The boogeyman's right here. For the downside, the boogeyman is right here. A low and a new low. That's the boogeyman right there. If you want to know where he is, right there. I know where he is. I know exactly where he is. Yeah, volatility should ramp regardless of outcome. Vol should ramp. So there's like three things here. Like vol should ramp if you got spot up, vol up. The vol should ramp if you trade lower than the expected move. And vol can ramp just on expected events. Even if price doesn't go. It's one of the great things about VIX. You can trade the VIX regardless of outcome in price into events and make money. I love the VIX. Love it, love it, love it. You don't even need to be directionally right. Hell. Oh, God, what is that? War finger ring? Oh, war finger ring? Oh, gross. I get the pun. I get the pun. I get the pun. Right, 568 right now. God damn it, I could have gotten in lower. It's 578 trading. I don't actually need to stay in that long, do I? 568. What does that look like? Here's another cool thing. Don't trade on this platform. It sucks for entries. It doesn't suck for entries and X. I want to talk to you guys with something else. If you're a young trader and you're trying to learn spreads, okay? Try to open an account with a prime bank that you can trade spreads on. Not Robinhood. Nowhere else. Not even Tasty. Any brokerage that has that paid order flow. So basically a non-prime bank. Listen closely to this. This is an important one. Even Tasty, dudes. You're not going to get the best fills on opening and closing. There's a range because you have multiple strikes open. And you sometimes will get like a fill on one side, but not all of it. And they'll give you like a range. And you're like, there's two important things here. They'll give you like a range of how, like the bid and the ask is usually wide, even on SPY. You sometimes won't get fills if momentum's not in your directional. Like the moment momentum stops, you won't even get fills heading on the way down. So you always want to be closing directionally, or you want to be closing bearish or bullish spreads. If it's bearish and bullish, you want to be closing those while going up or while going down, not against where you're trying to close. You can actually lose some money. Also, close if you're in the money in any of this stuff too. Never let it go over the money. If you're like if you get like 90% of your trade, get out. I normally get out at 50%, but I will go to 90 if I have to wait to the end of the trade. Never let any spread close on expiry day. Another thing here would be you can trade time or direction. You can go more in the money in your spreads, and it's becomes a time-based spread. It's almost a neutral spread. You might be better served with condors or with a butterfly. I always like to go a little bit out of the money in directional bull or bear spreads, personally. And I also like my spreads, if I can, I really like them to be, let's say I'm spending $100. I like to spend 100 for double, like 300, 100 for 300, something like that, and then close them at 50% of value. What else would I want to say? Some like finer points on this stuff. I'm looking right now at 568, 578s. Here's another fascinating part. This is an easy one for you. Some brokerages allow you to easily cycle through different spreads. Don't ever, because of the premium on each side of the spread. So what I would say to you is, even if you've never traded this stuff before, at different places in the market, watch how the value of spreads move up and down. A great website for that is options.ai. You can open a spread. No, you don't open it. You set the spread up and just watch the value of that spread as time passes. Execute it after you get familiar with when spreads are cheap and more expensive. If I'm trying to get a bull spread, it's always better to be opening them on a down move, not chasing on an up move. Another note would be different strikes cost different money. You might be like, oh, this is just an example, not in this one specifically, but you might be looking at like a 566 and a 576. And it might cost like 200 to make 100. You might go to like 568, 570. And it costs, 100 to make 300. Sometimes if you go too far in the money or not far enough out of the money, you're like spending 600 to make 1,200. And if you just like went a couple strikes above, you might be spending 100 to make 400. So cycle through the different strikes. Don't hesitate to be like, yeah, I'm going to switch these up and be experimental to find where the deals are, something that may not be priced in, something where there might not be premium on that strike. And if it's within the range of your expectations, take it. Maybe it's two strikes that are higher, right? Maybe it's not, if price is here and you take the strike here for here, and maybe you just move both of those up a little bit more, but your top is up here, right? So your 2 is not here to get here, or even I don't know how to do this shit. Like instead of the spread from here to here, you move that spread higher. Maybe your top is above that. I don't know if I'm saying that right, but I guess you probably draw that out instead. Your target's here. Price is here. Hold on. Target's here. Price is here. Your spread, let's say it's here and here, or here and here. Your difference in cost and payout might be different, and you've got a little bit of buffer for your actual target. These might start cranking, and you don't even need to hit target. If you're in an up move, you can actually get out before you even hit it and make bank. You don't actually have to get in the money. Yeah, I thought that it was just an opening and closing issue. I didn't think the spread was wide. I just thought that the closing of them was difficult. Am I wrong on that? Sneaky, am I wrong on opening and closing those spreads, even if the spread is tight, that they won't fill all the time? I have problems. If I'm taking a directional spread, I have problems the moment that direction moves to close them, even in the bid-ask spread, the spread of the closing of that trade. I don't know though. I've only been told this. I haven't traded them. I'm too scared of being caught. All right, I'm going to say this one more time. Okay, I'm going to go through it one more time for you guys. So, in a base case, you can open basic spreads on Robinhood. Your next jump is probably. Let's go beyond all that. Let's go bring it all back. I would start out by opening a brokerage. Honestly, forget if you're trading Robinhood or Webull or some shit. Webull's great, but my thesis here would be if you're a new trader, you're probably trading Robinhood. Your next step is probably Webull, and you don't even know how to use that. Maybe you do charting on Webull. And then you open an options account and you really still know what the fuck you're doing. Webull's powerful for someone that knows what the fuck they're doing. But let's pretend you're not that guy. Or maybe you're a smart trader, but you just trade zero dates. What I would recommend is this. Was me, I would say to you, open up an option strat account for paper trading. Second thing I would do is I would open up an options.ai account. Do not fund either of those accounts. You can get a free account, I think, with Option Strat, but you can pay for it. It's your education. You're paying for your education, right? So maybe you get a paid account on Option Strat, not funded, just paid for it, or a free account. And they actually give you free trades, free trade ideas. Believe it or not. But open up the options.ai account because it's got one of the best UIs I've seen to teach you basic spreads. Don't fund it. Don't execute trades there because that company is they have order flow like 2 times from what they actually are. Their fills are terrible. You won't even get opens and closes and what you want. It's always against you. They're killing you. You get murdered. What I would say is open those 2 up, then go open and fund a prime bank brokerage with a prime bank that will give you the ability to trade basic, what is that, level 2 or 3 options where you can lie. I shouldn't say this to you. I'll probably get a fucking fine for this. Just lie. You got 10 years. Say, yes, I got $1 million and I've been trading forever. Seriously. Not financial advice. Don't do that. Do not do that. Do not do that. Get that account and with a prime bank, and you execute the trade there. If you can get margin, you can usually open those trades separately. What else? And I would start fucking around with basic spreads. Watch how spreads move. Watch how they, like, let's say you open a call. Let's say you're like, theoretically, you wanted to open a call spread today. I would get an options AI account and I would open them. I would open them with an expiry of this Friday. I would open some of them with an expiry in 90 days. And I would open them like an expiry in 2 weeks and see the ebb and flow of the price of those options. Think about, could I handle paying $100 for a call spread that goes to $1 and then swoops up at the end of a quarter and pays you $300? And as a matter of fact, we're at the beginning of a quarter, right? You want to see some cool ass shit? Paper trade yourself a call spread for $6,000, right? With an expiry of January 5th. Hold that in a paper trade from now until January 5th. I don't know what that costs, but let's say it costs $500. I bet there will be a moment this quarter where that fucking thing goes to $1 and then prints $1,000 or $1,500. And then think about to yourself what you'd be acting like. Your emotional state of going, I paid $500 for this fucking thing. It's worth $1. And then it prints $1,500. Last session, 3:45 in the afternoon of end of month or end of quarter in Q4. It's fascinating to watch, fascinating to manage, and fascinating that you get a print on it. Sometimes the last day at 3:45 in the afternoon. That's how we know to trade those big rips into closes, because they're trying to print spreads that people have on the quarter and on the month. Sorry, I wasn't reading I'm missing some of the chat. I apologize. No, I realize. Oh, I see what you're saying, Taylor. I'm saying that I shouldn't say that on a stream. I'm just saying on a stream I shouldn't say that. I realize everybody does it, but I think there's people that watch this stream that have no. I think there's people that watch this stream that fucking literally day trade or trade Bitcoin. You're telling me that not a single one of you ever came into the market and said I'm a level 1 trader when you took the when you signed up for an account? I did. My first time I did. I'm guilty of that. I did that. You had degens all around you? That was surrounded by my people. They found me. I didn't find them. Which prime banks? You can look them all. They're like most of your banks offer it. Almost all banks offer trading off a prime bank. If you can't find one, if you don't have an account with go to like Schwab or some shit and be like, I want to open a brokerage account, please, sir. I'm a degenerate and I want to fix my ways, my wayward ways. Any prime banks are like JPM, GS, your local bank you go to that you open a bank account with. Schwab, there's a bunch of them. Yeah, Canadians are fucked. I've heard that before. I got 578, 568. 378 to print 622. October 4th in 2 days. Not a bad trade. Could be a better trade. We're already cranking, that's why. It's 578, 568. What about 570? Ooh, 269 to print 531, 572 to print 578, 174 to print that, 574 to print 578, $97 to print $303. Woo! That hits my shit right there. Friday expiry, 574, 578, $96 to print $303. Oof, between time and direction. That's not bad. That's juicy. I like that one. What do you guys think about that one? What do you guys think about a Friday expiry, 574, 570? Kind of risky, right? The expected top on Friday is 573. Max profit, you got to trade 578.03 or more. But directionally, I bet that fucker starts printing before you ever get there. You don't have to hold all the way up into the top there, do you? I like that trade. Oh, TLT. We've been talking about TLT. So this morning, I wanted more blood in TLT. Let's talk about TLT. I haven't looked at it in a while. TLT. Let's take a look at TLT, bottom right. Sorry about that. I've been meaning to talk about TLT all day long. I've been talking about it, but not really. So TLT, when it was up here, everyone wanted to get long, and I was like, nah, that shit's coming back down. This shit started coming back down. I set 3 alerts. With you on stream, I set an alert here in this zone, $98. Then I set another alert. Right, you can't see. Oh, you can see. It's right there. Set another alert right here. Right there. Why did I set a third alert? Because of that shit right there. 1, 2, like clockwork. 1, 2, 3, 4. Yeah, it's pretty regular. Ooh, big moves. Woof. A little bit of moves here, a little bit of moves here, maybe a little bit of a move here. Maybe they even get a little bit of a move right here, but seems like it'd be a regular printer down here. Whoever the fuck's been buying that goddamn trend line, doing pretty good for themselves, aren't they? They're making bank. Patience matters here. So I got some rules here with TLT. I got some rules. I tell you these rules all the time. Have a basket of stocks. See my basket over here? I got a basket of stocks over here. The bigger the basket you make, the more alerts come across your desk. If you don't have a basket of stocks, you should start to add a basket of stocks. If you have a basket of 10 stocks or 100 or 1,000, and you don't get married to them, instead of trying to chase, oh God, FOMO, I'm getting burned. Every one you add to your basket, you can just wait for it. And you forget about it. So my first alert's tagged. I literally got an alert that said, ding, 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 Cappy, start paying attention. So then I look at market conditions. I look at TNX. I look at the 2-year, I look at the 30-year, the 20-year. And I go, am I ready to buy here? We're going to start breaking out? Yeah, you know what? Maybe not. Maybe we'll go down there. So now I'm aware and watching TLT. Let's say I've got a basket of 100 stocks and TLT runs away from me. Well, that's okay. I got a basket of 100 of them. There's probably 5 or 10 stocks that are going to come to me. I'll do the same thing. Check market conditions, see if there was an event, see if they got sold down in an ER when they shouldn't have been, and it's now time to buy. Starts making some progress here. Daily trigger maybe is coming up. Hourly trigger coming up. They're all hitting the right things for me. Execute along right there. If it doesn't come to me or runs away from me, that's okay. I got 100 other of them, 1,000 of them. Start building yourself a basket of your own stocks. When I call them out to you, if it doesn't come to you, don't take the trade. I got a better example of this. SOUN. As a matter of fact, last night I spent time looking at them. I've been looking for a test down here. They didn't hit it here. I didn't get it. I'm looking for a breakout. This is a good company. They've been a regular printer. They're cheap entry. You can buy 100 shares of this. They got the bullshit scam. I love these tickers because these days sometimes we launch a stock overpriced. They sell it down to the depths of hell. It eventually starts to bottom. Gets accumulated by hedge funds a second time. They bought it, then sold it to you here. Then they rip it. Bam, bam. These companies are spec growth. We're in a bull market. They've met all my requirements. They make a real thing that makes real money. They've had a series of great ERs. They're not telling you they're going to build you cars in 10 years. They actually have income coming in. I don't like that there's no breakout right now, but what else is happening? They're above their monthly trigger, right? And it's been a regular printer. Buy, 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 buy. Now, this one here is not doing what I want it to do. On a 30-minute basis, I liked this stock. I wanted to see price get up here and make some new highs, but they haven't been making new highs, have they? That's a new high right there. Not quite yet. I don't like this roll here either. So I haven't actually bought this stock yet. Haven't bought it. We're coming into the seasonally most weakest. So I looked at this last night because I'm like, coming into that period between October 31st and November 15th, I haven't had a chance to buy. Maybe I can get a low. Maybe I can get a deal. So I went and looked up the CFO. Guess what he is? He's a scumbag. I went to his LinkedIn last night. And in his LinkedIn, all his buddies are from like VC funds and banks that love to do all that scam bullshit over here where they burn retailers. He's like wrapped up with all these people. Their own CFO. Look him up. He's like buddies on, he's like, all sucking each other off. And I'm like, these guys are running scams here. And he just sold some of his position. That's true. And they got great numbers. Like, their fundamentals are great. So now I'm like, suspect. I'm like, yeah, what are these fucking guys doing here? These guys are running a scam. I would expect nothing less. Nothing less from these assholes. Now, fraud is the only reason I would sell this company. But I'm betting right now by some of the shit that I'm tracking on this CFO and who he's tied in with, they're looking for a fucking deal down here. So I'm going to set some new alerts on this company. Now I want better. This is all bullish. This all looks good. Trading higher, turning up on the weekly. That's positive. This is why I started to like them. Their weekly was turning up. Their monthly was turning up. Look closely. This is what I want to see right here. That's why I'm watching Sound and a bunch of fundamental reasons. And I'm watching them because of shit like this right here, right? They crank. $1.50, $2.43, big move. $1.63. Whoo. Whoo, whoo, whoo. Whoo. 10.22. Damn, that's beautiful. 100 packet down here. Selling options against it. Or take or like it with options. Bank. I'm getting a little suspect right now, this company. I bet they're trying to fuck around in the background. Now, they might run away from me. I've been watching them. They're on my radar. They have great fundamentals, by the way. They have some bad Q3, Q4 reports, though. They're back into, and here's the other thing. they're taught the CFO is a big M&A guy, and he's been discussing like mergers and acquisitions. Either him be, I think he's trying to have the company be bought by another AI company. He's talking about like buying other AI companies, but I think this is an M&A target. So if I can get some weakness, any kind of weakness, I'll take anything. Any kind of weakness in here. And I don't care about these little things up here. I'm looking for something like this right here. I don't care. Now I don't care. Now I just want that move. It might run away from me. But now I'm getting greedy now. I might not even get the trade, but I'm going to bring this up a little bit higher. I'm going to bring this up a little bit higher. I'm going to start setting some alerts on this. So now I got alerts set. Price rips down here. If it does, for some unknown reason, some scam bullshit or whatever, I have some good examples here. Bam, right there. Bam, right there. Bam, right there. So maybe we go up a little bit, but if we can get a little bit more bam. But Cap, I want to chase FOMO, bro. How about set the trade up before you ever get there? And just be waiting for it. Maybe it isn't this company. Maybe it's a different company. SOUN. But Cap, everybody tells me it's going to moon. Yeah, whatever. Fuck them. I'll just wait down here for them. SOUN. Been watching them now for, I think, a month or two. Now I'm greedy. That's how I trade stock. Now, let's say it runs away and they're like, oh, Cap, bro, you missed it. It's okay. I got another fucking 1,000 of them. They got great fundamentals, good company, M&A candidate. If one of them goes down there and I can get in on it, I'm down. I got a higher win rate than you likely do. So there's a good setup for you. You do these things with me over the course of a year, 3 years in a bull market, and they will become meme. They already are. A bunch of them we've been picking are already memes. They talk about these tickers on Wall Street Bets right now. IOTC, right? Remember those guys? IOCT, IOTC. A bunch of like sound is now on Wall Street Bets. Like everybody's watching these fucking things. Anyways, there's a freebie for you. SOUN. I saw someone making a joke about Disney yesterday, Winky. About Disney at $30. Yes, Disney is a buy at 30. Someone said that. They were talking about it yesterday. I look at them. Yeah, that fucker. I want that goddamn $72 so bad. They still won't give it to me. Now I want it deeper. No, I want it down there. That's my first target right there. Now I'm like, fuck you. I want it. Now I want like Doom down there. Now I want fucking that. I want there now. I love Diz. Diz trying to break out right now. Winky's bringing up some. Do you guys see what Winky's talking about here? Winky's showing you that there's a nice trade here for bulls. Weekly's turning up. Daily showing you the way. As long as price holds right here. He's talking about a move up here to $104, 108, maybe 110. You just buy that stock and hold it. Put a sell stop underneath it. Cheap entry. Does everybody have $100 on them? You can buy one share of this. Make 15%. Pretty good. Stop underneath it. Goes against you. Come back one day. Limited risk. It's fucking Disney. Move that over there. Move that over there. I see that, Winky. Disney's getting productive. $574, $578 for Friday, now trading $99. You want BA, Harry, on Pro Trader? Done. We've got I want to tell you guys something here. So I've got my sheet right in front of me. Or I did. I don't have it in front of me. So I want you guys to know something. You're going to get, you saw Doug Fuller come in this morning. This is another update for you. We're going into a seasonal change or expectation of seasonality. So Doug Fuller was in the Discord this morning. Told you that transpos are coming into seasonality if you trade that kind of stuff. It's not always exact, but there are professionals that follow seasonality. We are coming into Q4. You should be expecting by the weekend a shift into a focus on different issues in the market that are coming in or out of seasonality. In the Pro Trader rooms and on the website, you're going to get an update. I think we posted. Oh shit! I don't know if I posted that yet. I was going to post Tesla and oil for you guys for market chat. But anyway, I'll get that done for you. I'm sorry I didn't do that yet today. You're going to see a shift in what is offered in Pro Trader Elliott Wave based on seasonality for the quarter. And you're going to get a quarterly outlook into the weekend, and you're also going to get a shift in what we cover. So BA, yes, I'll add that back on the list for you. I've got that in my notes. Done. I got you, Harry. So Pro Trader Elliott Waves are typically based upon seasonality. I want you to realize that. They're not based upon your personal choices. So to get you guys into fucking trading seasonality. Now, another thing here. You're also going to get tickers for Fangman for Q4. So you know how you guys are like, let's say you have a ticker symbol. PORN. You have a quarter. Inside of that quarter, you have an ER, let's say. And they're selling down porn into that ER. or they're buying porn up into that ER. Do you know a lot of you get into the trade for porn? Like right here? Or like right there? Now that we're at the start of a quarter, and we're going to be looking at seasonality for pro traders and Elliott Wave, start to think about the ERs, not right now that's wrapping up, but the ERs that are coming out in Q4. And Elliott Wave and the expectation of trading down into their ERs or trading up into their ERs. And maybe jump on the train early. So I bet if you ask Winky, he's probably already thinking about tickers and their upcoming ERs. He probably has been watching ERs and guidances from some of his favorite tickers in Q3 and saying, "Oh yeah, I gotta find out what's going to happen." Another famous one is financials, right? Financials, if they're being run up, what do? What's the behavior if they're being run up? Or what's the behavior if they're being run down? Options AI gives you behaviors for all the past like 6 or 8 ERs for a lot of these companies. Go to options.ai, or Google search options.ai earnings calendar. Within there, they got some tools that show you previous expectations. I already know that if they're trading up a financial institution, they dump that shit like a day before the actual report. They don't give a fuck. The market and the stock burns. Did you know that? Maybe not, but whatever. We're at the start of a quarter, is my point. If you are thinking about getting long, let's say, your favorite ticker, and you're the kind of person that watches it trade higher and higher and higher on maybe on a deficit, or maybe like let's say you got Tesla, let's say, and they're trading up into their ER, and you're like, wow, it's going up and up and up. And then you get long like the day before their ER. How many times do you get fucked? Or maybe you're looking for a seasonal low to get long into their ER in a couple weeks. Maybe there's an opportunity to dump them. They've been riding high. Maybe they are going to get a lower. Maybe they've been low, So expect that shift today, tomorrow, into the weekend. I have the sheet of paper in front of me past week, but I've been working on matching up what to focus on for I gotta look at pair trades. I gotta look at commodities, metals, fucking lumber, fucking goddamn tech and airlines and China stocks and all this other crap. So it's a complicated process that takes me a week or so, 2 weeks. It's not 5 minutes. So you'll see that shift as the week wraps up. For the quarter, you'll get expectations for the quarter and potential places to buy dips or to keep selling into or take profit if you're selling into. And each one of these tickers for the start of the quarter always gets a note. They're coming into season. They're leaving seasonality. Call spreads. October 4th expiry. Long call 574, short call 578. Now trading $100. Well, I'm going to go on FinTwit and shitpost. Shit posted on FinTwit tonight. Shit posted on FinTwit tonight. Shit posted on FinTwit tonight. Make 'em rage on FinTwit tonight. Oh boy. Take all their stops, take them all, take every last one, get it done by Thursday. Oh, what's up? What's up there? Show me that stink. Oh, what's that stinkiness? Oh. Bob in the basement's like, God damn it. Bob's like, I want a death and just. Bob's like, I want nuclear war, please. Want all their goddamn. Let's just check the. Should be checking here the. Let's find out where these dorks are at. They loading up on puts here. I want to, because I guarantee there's always, like, Bob's always out there just revenge trading right now. Let's see if he's revenge trading. Oh, no, they stopped buying puts. They're doing good. Call buying's in effect right now. Good job, Bob. Good job. You might get a buy-in again. So just so you, or not you might. You should get another bounce. There's still like an opportunity here between now and fucking Thursday. There's probably another bounce coming. Probably another chance to get on the train. You don't have to buy it here. There's plenty of time. I think you got plenty of time. If you were in the show since this morning, I showed you the bounce in history, right? Bounce, bounce, bounce. Probably get another chance. These are spreads, man. They're easy. Maybelline? It's Maybelline. Don't feel like you have to chase me in that trade either. In the Discord, if you're in the Discord, you just set the trade up and wait for it to come to you. You probably get another chance. There's no need to chase. You just like hang out. If it comes to you, it comes to you. If it passes you by, it passes you by. There are many more opportunities. The stock market doesn't end on Friday. Am I sponsored by Spreads? Yeah, I am here. I'm sponsored by Spreads here. Unless we start breaking down the market here. I got a catalyst. There's some doom here though. I mean, we got PMI and we've got jobs, right? Initial claims. You could see a nice little bloodbath down here. Could be another little like doopy-doos on the open tomorrow. Could even go lower. Israel could come out and start bombing. It's all right. We'll manage it as it goes along. My whole account is not in this trade either. I don't have like fucking $250,000 riding this. I will have a large trade though. November or October 31st, November 15th. I'll be looking to get long in a significant way. That's my window. Your window might be different than mine. Don't come back and be like, Cap, it never happened. That's just my window. That's what I'm looking for. We all do our own stuff. Every time I say that shit to you guys, I say that shit to you guys. I already know in the background, you're like, fuck that guy, follow him. Oh, live streaming? Oh, dude, it's brutal. How about this? I have a thin emotional skin. I don't know if I talk about that, but it sucks to live stream sometimes because you lose publicly. It's not a fun feeling. It's not. Matter of fact, I just closed some call spreads that weren't in the money until close, like 3:45, 3:50 in the afternoon. They were burning a whole fucking week, and then I'm getting berated by people. Like, what the fuck are you talking about? I fucking did it perfectly. It's not easy being a streamer. And then you get like all kinds of other dog shit. Then you get like swatted and stuff. There's a lot of danger doing this. There's a bunch of shit. I got to be careful too. Like, this is why I tried SPY specifically. I can't be accused of manipulating it. People are like, why do you trade SPY and not this and not that? This is like, I don't trade certain. So like, there are some futures trading streams out there, I'm not going to name them, that have like 30,000 views. Those are fake. Because those streams are put on by a company. They actually buy those views. Those aren't real viewerships. Then there's like the real futures traders that live stream. They don't have any viewers. And I need some viewers. I'm not willing to sell myself out like a meme stock person. Not memes specifically, but like the Meet Kevin kind of stuff. I don't record videos. Live streams in general don't have a lot of true viewership. I don't know if you know that or not, but that's the truth. I'll tell you the truth. I can buy views, and you wouldn't know it. It's dirt cheap, and fake it out to you and make it seem like I have a ton of viewers, followers too. All my stuff is natural, all natural. You can check. There's ways to check to see if I buy anything. Followers, followers on Twitter, you name it. You can actually check to see, and you can actually lift the skirt and see. I don't do any of that. You can ask Bork, Joe Donut. I don't do any of that shit. I've been offered, haven't done it, and there are ways to make it look kind of organic. There are some smart people out there that have offered that too. I haven't taken them up on it. What else? There's certain things I won't ever sell out to ever. If I ever do, call me out on it. I'm just not that person. I trade SPY. The big reason I trade SPY is because it's easier for me to not be a pump and dumper. I don't want to go to prison. I got a wife and kids. I get laid by a blonde, blue-eyed bombshell. She's fucking hot. What the fuck do I need to go to prison for? She's been with me forever. She loves me. She's dope, dude. She's got dope ass, got nice tits, got everything. Smoking. Loves me. She actually chooses to have sex with an ugly man like myself. Can't complain about that. Fuck do I want to go to prison for? Going to prison for anybody? Got daughters that love me. Like, my children talk to me. I always joke with my daughters. I'm like, you guys need a reason to hate me, don't you? So you can tell your friends I suck. I'm like, you need a reason to call me a boomer. I'll make things up to try to, so they can tell their girlfriends and shit that I'm a boomer. Like, so they can get angry at me. I got a good life. Hope to not, I was thinking about it last week. I was like, I would give everything up to just be young again. I love my life. My life is awesome. It really is. Like, I have a great life. My wife is amazing. My kids are amazing. Nothing else equals that. My dogs equal that to an extent sometimes, but they're the same conversation. I really do. I love my wife and children. If you ever have that experience with a loved one, anyone, friend, person in your life, a mother, father, aunt, uncle, you name it. If you ever have that relationship with somebody, it's amazing. And I had bad relationships when I was younger. I had some bad relationships. When I was younger, I was kind of a handsome guy. I'm not anymore. I was in shape for most of my adult life, like good shape. I was intelligent, went to school, did think the military helped, but I dated a lot of crazy. They were like the hot, so like super hot and crazy. You know, the hot crazy scale. I did that stupid. You ever see that? You ever see that that YouTube video about hot and crazy and how they don't mix? I did that. Did it multiple times. And of course, learned my lesson. Some guys can do that too for the rest of their lives. Some guys and girls and girls and girls and guys, and sometimes you marry or get with people because of what? Money, power, fame, looks, intelligence, whatever it is, whatever your thing is. So I'm not knocking it. It just wasn't for me. I'm like a homebody, not a home, like I don't stay at home, but I love being in a relationship, in a loving relationship with someone that cares about you. I love that shit. I do. I love that, like, long-term relationship. I love, like, I shouldn't say that stuff. Like, long-term making love to somebody is amazing. Deep conversations, going through horrible experiences together, fighting and learning from those fights, like all that stuff. I love it all. It's a good part of life. You die alone, so it's to have like spent that time. For me personally, I don't have a lot of faith in anything after I die, so I spend a lot of time personally No, my kids are. I'm spiritual. My one of my daughters is believes in God. My other daughter is spiritual. I'm spiritual. My wife's spiritual. My wife's open to. She's agnostic. I would say. I was raised Catholic. Come from a family of religious people. But for me personally, my own personal choice, I really I have this like deep-seated fear that there's nothing after this for me, that I will never know this existence, no matter what happens, and then I'll never remember this again. And so I think about that a lot, especially as I get older. I think about it becomes more and more important as it didn't matter to me as much when I was younger, but as I'm growing older, my relationships are meaning more and more and more and more to me right now. Do you guys feel like that when you get older? I've been feeling that a lot lately. Past like decade, it's come like more and more and more into focus where I know I'm going to die alone, and I don't want to die and not having just like sucked up every moment that I possibly can with people that I love. They're very important to me. If she's a 10 on the hot and 1 on the crazy, she's a man. Yeah, that shit held true for me when I was younger. I met a lot of like super hot women, like super hot. Like you go to, like I could take them anywhere and they'd be dressed to the nines, like 10-inch heels out in the middle of nowhere, wearing a short skirt, perfect. It was weird when I was young. I liked a lot of makeup and stuff. As I got older, I don't like that. I like that natural beauty. I like women that are like by my own personal tastes. I like a woman that's like with or without makeup, they look gorgeous, like just natural, aging like fine wine, and they age beautifully. That kind of stuff. They don't have to be hot either. I'll be out and about, and I love like the woman next door. Like they don't have to have like natural like hotness. I I know a lot of guys like naturally hot women. I like the women that are like I don't know, the mom next door or something like that. They get some time on them. They look like a little age on them, a little bit of worked out their life. Not worked out like work at the gym, like they've put some miles on, like a man does sometimes, the right way, not the wrong way. Been through life experiences, that kind of stuff. Not necessarily into like super hot, even naturally super hot. I like I don't know if it's saying plain, but I like nerdy looking women too. I like smart women too. My wife's smart. Like I love a smart person. I like independent women too. I like women that like take care of themselves, highly intelligent, have a intellectual conversation with them, treated as equals, take care of me if I need them to, take care of them, and they're okay with that too. I love all that shit. Partner, friend, all of it. I want it all. I want them, I want it all. I cook. I'm the cook. I guess that helped me. My wife tells me that helped me. For her to stay with me is that I'm a cook. She doesn't have to do the cooking. I cook. I mean, I like she'll be like, tired and shit. I'll do the cooking. I'll do the shopping. I do the food shopping. I do the cooking. I spend time with kids. Not all the time. I do some cleaning, but not the most. We do have some help with that, but like major stuff I'll do. She says all that shit helps. I like the arts, and she thinks that's a lot. I read. She likes that. If you're a guy out there, I'll tell you right now. Like if you like music, like good music, I mean good, like just top 40 shit. Like if you're a musician, even if you suck at it, I play guitar, but I suck at it. Chicks love that shit. All chicks, they love if you can play an instrument, even if you suck at it, and you can like play guitar and suck at it, and if you can just strum some shit and hum along and make up funny songs, they love that shit. If you can do some artwork, even if it sucks, any kind of artwork, they love it. They love like carpentry. They like I don't do a ton of I've done that stuff. I've dabbled in it. But they love like someone that they like men that take on new interests. They love men that read, believe it or not. open to new ideas, even if you're not believing in those ideas. Open to them, listen to them. That's a big one. A big one. I got some stuff. So if I don't care if you're straight, gay, whatever, you can be. I don't care. Fucking 10 husbands. I don't care. You want to know how to stay in a relationship? When your loved one gets off work, ask them how they're doing, especially as a guy. Be like, well, how was your day, honey? And listen. That shit, man, goes a million miles. If they get sick, take over. Like, I got it all for you. That's not often. You don't have to do it every day. You just do it like when they're sick. That shit goes a million miles. You're like adding hearts in the bank. You can fuck off and do whatever. They're just like, he's there for me every time I get sick. That always, like, you don't have to, like, the best part or at least in my experience, best part about a woman if you love her is they don't even expect you to do much. You just have to do it when it's the appropriate time to do it. They remember that shit. I'm telling you, they remember that shit. I don't remember that shit. You know what I care for my wife? Maybe everybody's different, but I love having a coffee made for me in the morning. That means a lot to me. I work my ass off. I legitimately work long hours. Over the course of a day, my work is split up. I get breaks. Like, I get breaks to spend time with my kids, get breaks to spend time with my wife or the dogs. But because of that, my day like starts at like 4, 5, 6 in the morning. It doesn't end until sometimes. Last night, my day did not end until 2 in the morning. Because I got to split shit up. I got to take care of this, take care of that, take care of this, take care of that. There's no like defined work time for me. So, like my wife, what she'll do for me is like she'll make me a cup of coffee. That's huge, huge to me. But then if she gets sick, I'm working that 12-hour day. I gotta like stuff it all in, do that other stuff for her. She remembers that shit. She really does. They fucking do remember everything. They fucking do. They don't fucking forget shit. They don't. But they're willing to break their balls, or at least my wife is. My wife does so much shit. I could never do what my wife does, ever. Ever, ever, ever. Like, no goddamn way. My wife is, I don't know about your wives or your husbands, but like my wife is the rock. Goddamn rock. Like, I'll jump in and do shit with the kids, like teach them like we worked on essays recently for like the 4th fucking time. But she'll be there for the essay work day in, day out, day in, day out. And then she like tag teams me. And I get in there and I'm like, okay, Dad's here. You know? We're not fucking around anymore. I don't say fucking around, but they know what I mean. No, hold on. They don't remember the shit no, they don't remember the shit that I think I do. That's what it is. In my brain, I'm like, she doesn't remember that shit that I did for her. That's true. That's true too. I can't bring that shit up because if I do, she gets pissed. And that's the other thing. You can never bring it up. That's another fucking rule of this shit. If she gets mad at you, you can't be like, honey, I'm there for you every time you need me when you're sick. You say that shit to him, you ain't getting fucking laid for a month. She'll write that shit down and be like, oh, he brought that up? Fuck his ass. He ain't getting laid this month. You can't bring that shit up. You can't say it. There's no like trump card. You're not playing fucking spades or whist with your wife. Like where you're like, oh, you remember that time I did that for you? You bring that shit up, dude, that's even worse. You just don't say nothing. I've learned that lesson. Guilty. I save that shit for like the big arguments. Like sometimes we do get into these arguments where I try to play like not quite chauvinistic, but I'm the ultimate, like this is a benevolent dictatorship. This I care about. And I'll say things like, I don't ever make any of these decisions over here and this one is mine. Now I can say that. But if she just still denies me and I bring up like, well, what about this time? I'm fucked. I'm in trouble. Oh yeah, I don't know. I'd be fucked. I don't know how people get divorced with kids underage. Maybe at like 16 to 18. There have been moments, I'll be honest, like there have been moments when my wife wanted to divorce me, where I wanted to divorce my wife. There are moments where we've told each other, I want to fucking divorce you right now. This isn't working for me. We've actually had that conversation. Maybe not for you, but we have. We're in the thick of it. We're like we're in the goddamn trenches with kids. Not now, but we have been. And the second sentence in that is, but I fucking can't, because I'd be fucked. And, you know, it's like we got to stick together in this, or we're both fucked right now. Neither of us get out of this alive. We don't just stay married, get through this. We'll revisit this conversation. I kid you not. There aren't that many of those, but there have been those lows. There are moments where you're like, oh, fuck, I can't do this anymore. I can't figure out if it's better to not be in this anymore or just get out. Unless you have like fundamental reasons, like, I don't know, you beat your wife, or your wife is fucking cheating on you again and again and again and again, or I don't know, she's a closet pill popper or something like that. But, you know, I don't know how people do it. I fucking don't know how they do it. Maybe they want to do it. I would not. Fuck that. 2 kids, divorce. I'll just suffer till they're 16. Just do what you can. Help me out. Throw me a bone for the next 4 years. Now, we're not there yet. So what I've been doing, this is the truth. So what I've been doing is I'm trying to keep closer to my wife as we come to this point. Here's another one. We're not there yet, but our kids are getting older. So I'm like, my wife and I need to keep, even though we're changing as we get older, we need to have some stuff in common. So some stuff I'm not interested in, but I want to get interested in it, because even if we have different things in our lives, I don't want to grow so far apart as we get older that it leads to divorce, because it can. It often does. And she might want to divorce me and I don't even know it. But she might be waiting for me, for these kids to get old enough. So I have to plan now for when our kids are both 16 or 18. How are them fucking spreads doing out there? They're not great, but they're doing better. They're slowly getting up there. Yeah, so my wife, so my oldest is turning 18 soon. Not now, but soon. Not soon, not next month. My youngest is just above 10 a couple years, and she's got a couple more years left until she turns 16 years old. And the other thing that scares the shit out of me is I might think everything is great, oh, everything's fucking awesome, and then my kids turn 16 and my wife's like, I'm fucking out of here, fuck off, buddy. You sucked all those years. I think I have I've got a chance for her to be like, I want to be with you some more. Let's see if we can, or at least I can plead my case and say to her, look, the kids are older now. We can go back to dating like we did when we were younger, when we were late 20s and early 30s, and let's give it a shot and see if we can, make it a second half of our life. I still want to be with you. Because I do want to be with her, and I don't want it to break apart or fall apart. But that's a real risk, isn't it? Ask anyone that's older; they'll tell you. I listen to old people. I'm like, the fuck that guy talking about over there. I don't want to fuck this up anymore. When I was young, I used to not listen to old people. I'm like, tell me all your woes. Oh. It's true. I'm not even there yet. Like, I got friends, man. They get the kids get out of the house and they break up. It's like, and they don't even fight. They're like, oh, it's mutual. We were together for the kids. You're like, oh, really? You didn't know? I had no idea. You guys were happy the entire time. Yeah, we were happy that we didn't implode raising these kids together. And I'm like, oh, okay. Congratulations, Jeden. Congratulations, brother. You must have been biting your nails this morning at least, right? You must have been watching the market like a hawk this morning. The fucking bears were begging. They had their window open yesterday, dude, after the bell. Like, their window opened into the close yesterday. They were overnight. I don't know every bear, but I'm sure there were some definitely smart-ass bears out there that were like, oh, that fucking window is open. I bet you there are some services out there telling you that the window was open last night. I bet. I saw it. I was like, fuck, there's a window there. Like, these guys want to take this shit downtown. It opened. That window definitely opened. I like blew my face out. I was like, oh shit, it's early. Like, today's Wednesday. They're opening that shit right now. The fucking bears, man. They got their ducks in a row. Like, when a bear tells me shit like this that's just going back to Friday into Sunday, right? Like, bears are like, oh, dude, market's crashing. I'm like, why? They're like, port strike. I'm like, I think you got a better chance with fucking Israel and Iran, bro. No, it's port strike. No, dude, I'm telling you. It's probably Iran. Israel, that's your best chance. And then, like, yesterday and the day before, it goes away, and I'm like, they still don't have the window open to the downside either. But then yesterday, I was about to do the brief, and I was like, what's your next risk event? What is the downside risk? And I'm checking. I'm like, oh fuck, it's actually gamma. They actually have a door. They have a window. That's valid. They still have that window right now. All they need is an event. So their ducks are in the row. My thought here is that they're all hedging right now. They're all like short at the wrong time. But their window is open. Like, yeah, you could write a book on that shit right now. Like, this is probably the best window they've had in a while. I'll give them that. 100%. I can't deny it. I'm not going to deny it. If you're a bear out there and you're like, there's a fucking gamma window to the downside, I would be like, that guy knows what he's talking about. That guy definitely knows what he's talking about. Yesterday you had Israel. Today you've got gamma. If the gamma window stays open and you get some bad news, they can flush this fucker down in a jiffy. You're almost there. I mean, you're at least primed for it. The window is there. I don't know if you get there, but you do have the window. I got to give you that respect. I'm aware of it as a bull. It's risky being long here. There is risk here being a bull. 100%. There's danger. There's danger. We ain't in late spring. We're not in the good part of town after hours. We're in like the wrong side of Detroit at like 3 a.m. right now. And your bull friends are like, bro, I know an after hours party. It's going to be so much fucking fun. You're like, it could be a really good time. I definitely want to find out if Lyft will come pick me up if something goes wrong, though. Consoling the bears. I guarantee there's a bear out there too that's got nobody in the market. It's like, I just can't wait until they pull the rug on these fuckers. Like, I'm gonna burn them all down. He's got a list. There's like a bear at home, and he's like what? He's like drawing out my name. He's like CaptainJimJames. Revenge. Remember that Happy Gilmore film? Was it like it was the one about football, and the guy's got always like kill this guy and kill that guy. It's like CaptainJimJames. Who's another famous bull out there? Revenge tweet on this one over here. Revenge tweet on that one over there. Trip is to fucking Thursday at 1:30 in the afternoon. I've said it like 20 goddamn times. What are you talking about, Tommy? Are you not watching the fucking stream and commenting? Put Tommy in a timeout. Tommy is like, look at him. Tommy's like, I'm in zero dates right now. Tommy's not in any calls. Tommy's a fucking liar. Hold on a second. We're gonna put he's crying because his puts are burning right now. What a bitch. I didn't even put him in a timeout. I just hit him on the channel. You don't even have to see him ever again. He thinks he's fine, but he's just hid. He's like punching air right now. Doesn't even watch the stream. Doesn't even know what I'm in. Doesn't even know what the ramp is. Guy's just like shooting the shit. At least if he was watching the stream, he could be shit posting or something. Now he's like commenting, but he doesn't realize that nobody doesn't see him. God. Tommy's like rage posting somewhere right now. Probably the kind of guy that like watches a TV show and then like rages about the character somewhere. He's like, I hate that fucking character. Consumes my whole entire life. Can you believe people do that shit? Crazy sauce. It's fucking pure crazy. Am I still there? Check 1, 2. Oh, maybe Tommy's trying to hammer us right now. Can you hear me on Twitch? All right, so you guys can hear me on YouTube and not on Twitch. That's fine. We got 2 minutes left. We've got hold on, let me see if I can turn some of this stuff off. We've got I gotta launch this. Hold on here. Sorry about that. S&P 500, 700 million to the buy side. NASDAQ, 100, 231 to the million to the buy side. Can't get enough of it. Dow 30 for the second day in a row, 176 million to the buy side. MAG 7, 264 million to the buy side. Every day they're just buying. Can't control themselves. Buying.